I dare you to take your struggle and see amidst the pain your purpose that will lift you up when you've fallen and will carry you forward when you're lost. I dare you to see light when there appears only darkness, and when none presents itself, I dare you to light the spark, to be the answer you need. I dare you to stand up to the human tendency to embrace security over adventure and predictability over growth. I dare you to walk into the darkness of night, knowing that today's unknown becomes tomorrow's foundation. And when it hurts, like truly hurts, when you look around and can't remember why you began or what's pulling you forward, I dare you to close your eyes and imagine looking back and thanking yourself for taking this path. Every low is a courageous step towards transformation, and if you've forgotten that, I hope this reminds you why it all matters. I hope you remember why this mark, the one you're making right now, is part of the masterpiece you've been longing for. It's taking you exactly where you need to be. Living is easy. It's my inability to die that kills me. My hesitance to lock my old persona up and place it within the ship's cargo hold, watch it sail away to some far-off place. Maybe for a minute, maybe forever. But the bird has to be uncaged. It must unlearn its constraints. It must metaphorically die to transcend that which it knew itself to be. I think we all have wings. I think very few of us put them to use. And isn't that the challenge? Perhaps we're too busy living. I've always had the ability. Now I've captured the fleeting awareness. Next, I must obtain the courage. Because the rule, the truth, the beacon of light to be followed is we're always one decision away from a totally different life. If dare I decide to take the mask off that's been so effectively fooling others that I've begun to fool myself. Dare I decide to play new games with new rules, to see life with new eyes. Perhaps upside down. But when your sight is finally set on infinity, when you're looking at the clouds while lying on your back, who's right, them or you? Who gets the honor of deciding? And sometimes I wonder how far we need to walk to understand that the danger isn't stepping into a new pair of shoes. It's thinking you need to walk the same path, down the same street, in the same pair of shoes you've had on your entire life. Strange, right? Peculiar, according to previous cognitive mappings, but maybe they're crazy is your oxygen. Maybe crazy is pure. It's desirable. It's been the goal all along. And well, where I thought I dedicated my life to its pursuit, I see how wrong I was. To think something new could emerge. No, not without the death of the old. Not without that caricature of myself slipping away. Not without that ship taking everything, every last thing. I want roots ripped from the ground. I want new heroes and new villains, new street signs telling of new roads, new tears from eyes stimulated by that which I've never seen, the increased rhythm of a new heartbeat, in anticipation of all that lies ahead. New beginnings, maybe for a minute, or maybe forever. I'll let you know once I learn to die. Greatness comes from humble beginnings, from grunt work. It means you're the least important person in the room until you change that with results. See, ego tells us that we need success now. It replaces action and progress with a false sense of reality. We fall to pretend stories and made-up visions of who we are, but they mean nothing. Talk means nothing. Even a child knows how to gossip and chatter. Anyone can do that. What's rare is silence. The ability to deliberately keep yourself out of the conversation and subsist without its validation. Silence is moving forward and creating every single day. Ego is the enemy of what you want and what you have, of mastering a craft, of real creative insight. Because it takes what's most important and deems it insignificant. The struggle, the uncertainty, the doubt, the things that not only light the path to success, they are the very foundation success stands on. These things keep us humble. They make us students. They show us that the best never stop learning, because with certainty comes the death of creativity. As Richard Feynman states, you must not fool yourself, and you are the easiest person to fool. When you fall into the trap of seeing recognition as the goal or status as the finish line, you will fall short time and time again. Triumph lives in a purpose much larger than yourself, from a focus not on being but doing, on driving toward a target, revealing a simple question: are you doing what you set out to do? Are you willing to endure what most aren't? Put in the hours and hours that go unnoticed, the struggle that goes unrecognized, and the incremental progress that goes unseen. Are you willing to let go of ego and become the best possible version of yourself? Failure, by definition, a lack of success. The definition of success, the accomplishment of an aim or purpose. According to these very guidelines, failing is to be marching toward an end point and for one reason or another, not getting there. Is failure a possibility? Of course it is. There are no definites in life. But failure is also self-induced. It is not an outside occurrence. It's not a coin flip or an event that we helplessly watch unfold before us. It's not up to chance. Failure is a decision. The decision to end that same march that you once started. Just like putting on your shoes is a decision. Just like traveling or running or eating, these are decisions that we make. And when the word is all too frequently brought up in everyday conversation, what's evident is that there is a fundamental misunderstanding of what it means to quote unquote fail. It's spoken about as though it's something that's projected onto us, as though failure is an illness or catastrophic event, something that emerges and subdues its victims. And speaking of it in such a way misdiagnoses the problem. It's easy to say, so-and-so started a business and it failed. So-and-so didn't make the team, so they failed. But there's more here. One does not fail until they take a step back, look at the situation, and say that it's no longer worth it anymore. You don't fail until the moment you raise the white flag and say, I cannot do this. Because if you're out there, if you're changing, adapting, stretching yourself and your abilities, if you're seeking help, mentors, learning, growing, embracing the struggle, being relentless in your effort, no one can bring that word into the conversation. It cannot exist. If you are moving forward, you are not failing. You cannot be working towards something and failing at the same time. It is impossible. You can have your ups and downs. No one will refute that. You can get knocked on your ass, have moments of fear and doubt, but that is growth, not failure. Growth is taking the uncomfortable and adapting to it, overcoming the obstacles that inevitably get in your way. Failure, on the other hand, is deciding that growth is no longer worth the sweat. Because I'll tell you what, there's always a way to win, and I truly believe that. Sometimes the cost is extreme, sometimes the price is more than everyone around you is willing to pay, but that's a conversation that you need to have with yourself. Just know that if you want it, somewhere there exists a solution, and knowing that is the beginning of greatness. It is the start of success. And as for that question, what if I fail? Here's some insight. That thought is wasted time and it is wasted energy, because as far as your goals go, you pull the strings. You are the writer, you are the director, and you are the actor. Failure only occurs when you write it into your script, when you choose it for an ending. And it is one ending, one of many. It is one approach of many. Once you've started that march towards what's important to you, do not let failure be the choice that you make. Choose growth. Choose the adventure. Choose the long way home. Victory over defeat, the uphill climb over regret. Choose to move forward when most wouldn't. It's the decision you'll always be thankful you made. I once heard a metaphor that our existence is like standing behind a curtain with tears or holes, and reality becomes which holes we decide to look through when we're peering out at the world on the other side. What do we want to see? And this message, well, it's for whoever out there feels like giving up or folding their hand. Whoever's been waiting for things to change but only sees the clock moving forward, this is a reminder that the very thing you need is on the other side of that curtain. And you don't need to change who you are. You just need to position yourself to see it. Because it's there and you're ready. When life hurts, we might have every reason to be in pain, to feel lost or confused, but I always find it to be a beautiful reminder that we also have every reason to seek out from that pain something we've never been before. Why is it that our greatest accomplishments come when our backs are to the wall? Our greatest acquisitions after losing something dear to us? Why is it that we find ourselves and our way only after being lost? I've never heard someone say, "Thank God I never changed or left or tried something new." No, it's thank God the adversity forced upon me the courage to evolve into something more. Pain is to our potential what water is to a seed. It's the beginning of everything, unshackling, opening the gate, and making us realize we were sitting on the answers. That adversity doesn't stop you, it makes you stronger. That the down times lift you up. That when you lose yourself, you find a part of you that can now become the bridge to your future. See, I understand that things are difficult and challenging. I understand they're not easy, and I'm not asking you to pretend it's not happening or ignore it or close your eyes. I'm asking you to find, amidst all of this, that one thing that will get you to tomorrow. I'm asking you to find the courage to say, yes, this hurts. Yes, I'm stretched thinner than I've ever been, but I'm still going to find a way. I'm still going to make it happen. Because at the end of the day, you won't remember what hurt or what stood in your way, but you'll remember what you did about it. You'll remember how you arranged those pieces. How when your instincts said run, you stopped and built something you'll never forget. I often ask myself, what differentiates those who wish for better outcomes and those who do something about it? What separates the dreaming from the progress and the wishing from the reality? Sure, life is complex. There are a lot of moving parts to understand. But I think this element is simple. Those who build things in life are willing to not only see a reality that hasn't yet materialized, but they also understand that in a world of no, they have to be the yes. They have to believe in their ability to drive towards finish lines that no one else sees. And see, meaning cannot come to fruition without that discomfort. Or as Nietzsche put it, one must still have chaos in oneself to be able to give birth to a dancing star, and that's just it. Most people see what is, most people conform, they do not create. To change something means you have to be the metaphorical eagle amongst pigeons, flying above all that, everyone, everything else. Superseding the limiting beliefs that shackle others to their one-dimensional realities. But most importantly, it means you can see. You can see what no one else can. You have line of sight to what no one else understands. See, in this world, no one walks up to you on the street, puts their arm around you and says, "Hey kid, that dream, follow that, because I can tell you're going to do big things." No one says, "Hey, that business idea, you're going to thrive next year, I know it. That relationship, it's going to happen. That level of fitness, oh, I can see it already." Nope. People see what's right in front of them. And as it pertains to you and your world, your life, people are those pigeons. And so that leaves you with a choice. Do you accept that? Do you blend in, take the scraps you're allowed to consume, the crumbs laid out in front of you? Or do you step back and acknowledge that this is going to be tough, this is going to hurt, it's going to push me further as a person than I've ever been pushed? But you know what I get in return? That view. I get to live above the clouds with those who don't wait in line. No, they become the main attraction. They transform what is into what will be, because the world, it has a way of ensuring that we really want what we say we do. Greatness in any area of life is reserved for those willing to carry forward when most would turn back. To build a bridge to something greater when most people point out that your bridge is not connected to anything, that it's a waste of time, it's trivial, useless, irrational. Good. Changing your life in the world around you has to be irrational. Taking the status quo and shaking it, saying, I'm going to alter this landscape, is irrational. But from irrationality comes the future. So when you feel like the world is against you, when you have an uphill battle to climb, when there are a million reasons for you to turn around, understand that this is nothing more than an indicator that you are right where you need to be, against the current, bringing something new to life. See, if it were easy, it would already exist. But changing your life, that makes you an architect of the unseen. So build. On the days you want to, build. On the days you don't, build. When they understand, build. And when they assume you've altogether lost your mind, build. Sure, it's not easy, but it's worth it. And when tomorrow comes, and it looks a lot different from today, when you've grown, evolved, transformed, and you look back and don't even recognize the person you once were, that won't be because you listened to the chirping of the doubters and the naysayers. It won't be because when strangers told you to give up, you packed your bags and went home. No, it will be because you rose above all that. They saw empty space and you saw a world undiscovered. They saw your head in the clouds while you built those castles in the air. You were always on a trajectory to something greater. You didn't need to convince them. You needed to convince yourself. To unlock the shackles and take to the sky, leave everything that once held you down behind. This isn't about anyone else. It's about the conversation between you and the horizon that awaits. There have been times in my life when I've been down. I've been out, I've been afraid. I've looked up at the road ahead and been completely unsure. And I can say firsthand, when you're going through a situation like this, that it essentially consumes you, right? It's all you see, it's all you think about, to the point where the good stuff, the opportunity all around you, it becomes transparent. You see right through it. It's the negative, it's misfortune for a period of time that becomes your narrative, becomes the story. What if this is forever? What if I'm not as good as I want to be or as they are? What if things don't work out? Never mind the fact that you've been here before and you've battled back. Never mind how far you've come. No, that takes a back seat to the discomfort that we feel right now, and that's the irrationality of the human mind. We forget. We forget that the lows create the highs. That temporary isn't forever, that you can't stand with any type of authority if you've never before fallen. Accomplishing anything is never just walking up and reaching a goal. It's about getting back up over and over again. Taking the bad breaks in stride and seeing the losses for what they are, necessary. What if I told you that the difficult times weren't just manageable, they were what you needed? Those moments when you felt helpless were a bridge to something better. A demonstration of just how capable you are and how strong you can be. Feeling lost, feeling defeated, sure, it's unsettling. But it's also a reminder that you are exactly where you need to be. In one form or another, your struggle becomes your answer. Life isn't always calm seas and sunny skies, but if you let it, it will teach you to weather any storm to come out on top. Never lose sight of the opportunity, it's there. Hiding behind the struggle, immersed in the ups and downs, and when you know that you will not let yourself stay down, that you'll get up. Struggle becomes a building block, not a weight around the ankles. With each stumble, you become taller. With each misstep, you step forward. The problem will never be tough times. It will be refusing to find that next level for fear of their materialization. Regret is a choice. And for those who refuse to stay down, it will be a choice that they'll never know.
Welcome. I hope you enjoyed that. I always love the Eddie videos, and thanks very much to Shane for putting an incredible introduction together. So I'm really excited tonight. We've got one of the people that I've worked with for a very long time, and one of the people I respect most in terms of the market and where the things are going, etc. We've walked a very long journey together, and you know, this book came out in 2013, and James actually wrote chapter 2 of this book. And so what are we here to do today? And we're about to embark on a 7-webinar series with all different areas and facets to try and add as much value to you in your life. And where we want to start is with global market insights. Now, before I get going and before I hand over to James, who is the main show tonight, I wanted to just kind of get you in the room and ask a number of questions. So a question that I ask quite a lot in the webinars that I do now, and I believe it gets people in the room, is what would it mean to you in 12 months or less to be earning a passive income of $5,000, you know, without any hassle or complexity? So just type in the chat box. What would that mean to you? Would that be good? Would that be bad? Do you want less? Do you want more? What would it mean to you? And I'm doing this very much on purpose, because I'm wanting people to get into the room and really to start thinking about this in terms of the process. The second thing is, how would you like a system which can statistically help you get there 5 times quicker, simpler, and safer? Now, some people will say, you know, get rich quick scheme. Nope, none of that. Absolutely nothing to do with that. But if there are systems and ways that wealthy people have done it over time, then there's a complete way that we can effectively copy it. And one of the things James is going to share with you today is that one of the most important things is to get the right information, which he's going to share. I want to share with you 2 people. So first is Jordan. Jordan is a high net worth 55-year-old, worked very hard all his life, wants to build a portfolio to ensure that his wealth is preserved, and, you know, wants to build a globally diversified passive income of at least $5,000 a month, $10,000 a month, or even $25,000 a month, simply and safely. He wants to diversify his investments between countries, currencies, and assets. He wants to use his limited time to get effective results with the predictability. He wants to save decades of frustration and millions of dollars to get the right knowledge for him and his family. He wants wealth protection, a plan B, and peace of mind. He wants to be held accountable with an accountability partner to get results. He wants to have a family office to help him manage all his financial affairs. He wants to create generational wealth for his family. He wants to have a fully completed and executed wealth plan and investor strategy sheet, and he wants results. And what about Victoria? an entrepreneur in her 50s, devoted to business and family, aiming to build generational wealth. You know, she's got a very, very packed schedule. She seeks a streamlined investment strategy that empowers her to make wise decisions, aligns her goals, and frees up her time for her grandchildren and daughters. She wants to understand the investment landscape so she feels empowered to make the right decisions for herself and her family. And Victoria's focus is on achieving financial freedom to cherish more moments with her loved ones. So my question is, you know, who here resonates with either Jordan or Victoria or both? Because, you know, these are real people, real stories. And, you know, my question is, do you resonate with them? Because one of the reasons that we've built this webinar series is that we want to empower people that are in these type of situations to help them achieve their objectives in terms of that process. How do we do it? Well, we believe it's all about living a life unlimited, and it's through Diversification 5.0. Now, just a couple of things that I think are important in terms of some next steps. We actually have a challenge next week. So it's a 5-day challenge. It's what we call our Diversification Challenge. I'm going to share just a couple of snippets today, but we go much, much deeper. It's 2 hours a day, Monday through Friday. And the challenge is one of the most advanced ways to be able to get knowledge and to leave with an action plan. So it's not just about knowledge, it's to leave with an action plan. We've literally copied some of the best in the world in terms of online and digital. And so if you are interested in that, literally just go to diversificationchallenge.com. I'm sure Shane will chuck it in the chat box for you in terms of that process. And then, you know, we've also got a masterclass. This is one of 7 series. And so the next one is coming up on the 14th of May, which is unlocking the 6 pillars to wealth. And this is the family office that we work with, Calio Capital. They've got 65 ultra high net worth clients, and they talk about, you know, your total return. About 85% of your total return comes down to your portfolio construction. And of that portfolio construction, there are 6 pillars to wealth. And so we will be running through that webinar on the 14th. So if you are enjoying these series, we're really excited. We're also going to have a Q&A at the end. So join us at the end where, you know, James will help us with any questions we've got. And then finally, in terms of just some next steps, Shane has built a really, really useful tool now to help people understand where they are on their investment path. And you can literally go along and, you know, take the next steps. And it'll help you whether you're a beginner or highly sophisticated. It helps you on the next steps as to know what you need to do. So we're tired of people saying we didn't take action, or, you know, we weren't sure what to do next, or, you know, we didn't know if this was for us. So we literally created a navigator to make it easy for you in terms of that process. Okay, so literally just take that step. What do we always say to people? The 2 most important things are to get the right information and to have the right partners. Now, a good example of this, 2 years ago, James did this presentation, nearly 2 years ago. It was July of 2022. And he spoke about the different commodities, the different markets. He also spoke about the stock market and what was expected within the stock market over the next couple of years. And it's a classic example of getting the right information. And if you take Wealth Going Global, which is a 6-module home study course that we built, you know, the very first is about the power of clarity. Then it's the top 5 countries to invest in. Then it's the top 5 currencies. And James actually takes us, this entire module was done by him around currencies. The top 15 assets to invest in. How do you find the right partners and avoid 80% of the mistakes? How do you build a portfolio over time? And finally, how to use technology. So just to be clear, tonight, both what James and I are sharing is the top of the iceberg. And obviously, if you want a lot more substance below the iceberg, then you have Wealth Going Global. If I go into currencies, and just before I hand over to James in terms of this process, I want to just share with you a couple of mistakes that I see people making all the time. And I know the slides are in different orders here because they come from a different presentation. But the third mistake I see when it comes to investing is down to currency. And often it's in a country like South Africa. In fact, I met a doctor, he had a home and his financial advisor was paid on the house, you know, et cetera, in terms of that process. And I said, well, do you know that the rand has lost roughly 5 to 6% year on year for the last 40 years against the dollar? So you effectively are investing in a depreciating asset. An even better one that I hear all the time is people go and buy off-plan developments. And in places like England, Australia, South Africa, you know, those assets don't even pay you money. You actually have to pay money in every month. And then the worst thing is, you, like in a country like South Africa, you're paying the money in. You're supposedly getting capital growth, but you're in a depreciating asset. It makes no sense in a depreciating currency in terms of the process. And, you know, again, in the book that came out in 2013, we spoke about the Global Wealth Index. It's a basket of goods where literally, you know, you can take all the years from 1983 right through to 2023. And as an example, you can take any currency you want, but if you take the rand to the dollar, it's lost 92% of its buying power over the last 40 years in terms of that process. And to just give you an example of what that means, I want to make this tangible to you. I bought a family home in 2013 on Teeson Island in South Africa, one of the top 5 estates. And if you look at the analysis just in rands, I bought it for 5.5, I sold it for 14. You know, it really makes me look like a bit of a hero, you know, 161% return, etc. But if you go and do that same analysis and you put it into dollars, when I bought that property, I basically invested the equivalent of $177,000. And if you take, you know, what I sold it for and the profit and everything else, and put it back into dollars at the new exchange rate, I actually lost $22,000. So although I bought a house for 5.5 million rand and I sold it for 14, in dollars I lost money, and that's quite interesting. And then if you consider that if I'd actually invested that money and earned roughly an 8% return, you know, et cetera, you know, that would have doubled or tripled in dollar terms, and which is, you know, quite significant. So I just wanted to kind of point that out because I think it becomes very, very, very relevant. You know, when one starts getting real, you take emotion off the table and you start to look at real kind of investments and why they're important. And another good example, I know that I've been heavily investing in America since 2012. I know many of our clients that are online have been heavily investing in America. And something James brought up about 2 years ago, if I remember rightly, in fact, it might have even been that presentation in July, was that the dollar was going to depreciate against the euro. And so if you're heavily exposed in America, you maybe want to start looking at diversifying into Europe. And what was really interesting is he gave a presentation literally last month to our Mastermind clients. We've got this incredible community of Mastermind clients. And James did this presentation where he actually showed that the US dollar is expected to depreciate anywhere from 40 to 50%, if not more, against the euro over the next 5 years. And I know we're about to go into this now with James, but this is the type of information that becomes extremely valuable for you as an investor. Now, James doesn't have a crystal ball any better than I do. He's not offering financial advice, neither am I. But what we are doing is using our experience, our tools, and our methodologies to try and give people a better idea of what's happening in terms of where the market's going. And I'll finish with one final story, and maybe, James, if you want to join me on screen while I bring up this story. But I'll never forget, we were doing a roadshow in 2013. We were traveling around the country in South Africa, and the rand was at R8.80 to the dollar. And this gentleman in Durban, he's a highly sophisticated, very well-known person in Durban, and he had just bought a house in America with us for R8.80 to the dollar. And then he pulled out. And I'll never forget, we were in a room in Durban, James was there with us, and we literally, you know, this gentleman pulled out. So I said to him, why have you pulled out? And he said, no, well, because my financial advisor, my banker, has told me that the rand will be R8 by the end of the year. And so, you know, I'll tell you what, I'm going to pull out. And James pulled up his scenario planning, and he said, no, I don't think that's the case. In fact, I think the rand's going to go 10 rand to the dollar in the next, 3 to 6 months. And I said, that's really interesting. I said, what probability do you put that at? And he said, you know, well over 90%. And the rand went over 10 rand to the dollar within about 6 to 8 weeks of that event, and has never ever recovered anywhere close to 10 rand. And this gentleman, I won't mention his name, I do have a lot of fun ripping him off every time I see him and asking him how wonderful his banker's advice was, because not only has the rand more than halved, in fact, you know, 8 rand to, you know, 19, 20 rand has more than halved, but property has you know, more than doubled in dollars terms. And so the gentleman's lost over 4 times his money. And I think without further ado, James, I hope you're here because I see your screen bouncing on and bouncing off. But my point being is that without further ado, it's a great story to lead into you, James, and the value that you've not only added to me, but to our community for the last 15 odd years. And the value for people in not necessarily, you don't necessarily have a crystal ball that has 100% accuracy, but you've got a hell of a lot better information than guesswork or listening to financial advisors that this is not their day job. So are you here? Or am I going to try and do this?
Can you hear me, Scott?
Yeah, I got you loud and clear, yeah.
Yeah, it seemed to having a bit of a problem with my video.
There we are. Can I make a suggestion quickly, James? I don't know if you want to log out and log back in just quickly. It often helps with Zoom. I don't know why, but it does. You there? James, can I suggest you just log out and log back in and see if it works better?
See if I can.
Grams off here. Should I?
Yeah,
My
suggestion is log out quickly and log back in. I'll tell another story in the meantime.
Okay.
Cool. So another story that I want to tell was another event we were at, and James was talking about again the rand to the dollar, and he said that the rand was going to recover. And Zuma just fired Nene, who was the finance minister, and I was kind of like a bit confused because it didn't really make a lot of sense to me. And sure as anything, the rand did recover, and it was like completely against sentiment and everything in between. And I was fascinated by that. And then the third story for me that was interesting is I remember when Bitcoin went to 20,000 rand to the 20,000 rand, $20,000 for a Bitcoin. And I remember James doing a presentation for our community and saying, well, it's going to go back to about $3,000 a Bitcoin. And then it's going to go high and it's going to go over $50,000. And I've owned Bitcoin. I bought Bitcoin. My average Bitcoin price was about $3,000. And then I sort of bought dollar averaging on the way up. So I probably sit now at an average of about $7,000 a Bitcoin. And when it went to 20, I thought I was an absolute hero. And then I remember him telling it was going to go back below 3. And then it went back below 3. And then I felt like a real idiot, you know, like, oh my word, I've lost all my money and it's it's going to be below what I bought it for. Because as I say, my average was about 7. And then it just steadily started climbing. And I'll never forget, I know it's gone over 50 recently, but it was the first time it went over 50. And, you know, we were, you know, it was more than double where it had been because it was at 20 and it went over 50. I think it got as high as 60. And James had literally called it. And that for me is another story which I found absolutely fascinating because it was well ahead of the time in terms of people and what people were saying, etc. And so I've certainly learned the hard way that just because my gut feel says something or because market sentiment says something, it doesn't make it a fact. And that's why hopefully he'll be joining us soon because I'm sure he's not going to be the expert trying to share the information here. But what we tried to do with the global market insights is, you know, he originally started in currencies, but has subsequently got into all the different major currencies, plus into commodities, plus into crypto, even the stock market in terms of using the models to give insight and foresight. And that's the purpose for tonight. So Marion's asking, what do you think Bitcoin is going to be around for much? Do you think Bitcoin is going to be around for much longer? Yeah, so Marion, let's see what he's got. I don't know. I haven't seen the presentation. So in terms of the details, it's quite interesting for me in terms of this is the second time with James. The first time that I had not the first time, but the first time I had a problem with him when we were doing a presentation was his power wasn't plugged in and his laptop died, and I had to sit there on stage trying to explain, you know, how he does stuff. And you know, I found it quite tricky because there's a lot of things I can talk on, but his topic is one of the harder ones. Let me just share with you here quickly while I'm waiting for him. So this is Forex forecasts. And this is the platform that I use to log in on. And so let me just open it up here. So this is sort of the bag. This is a subscription service, but I can basically go in here. I can see all the different forecasts. I can see the short-term forecast as in the next couple of days. I can see the medium term in terms of the next couple of weeks. I can see the sort of the next couple of months, and then I can actually see the next couple of years. And although this looks super overwhelming and difficult to understand, one of the things that I enjoy that he's done over the years is you can actually see here, there's like a problem. I mean, this is basically from Clem Sunter. So Clem Sunter taught me this, and then I worked with James on this because I was like, well, tell us, like, what are we expecting? What are the probabilities? Where do we actually see us? So it makes it, a lot easier to sort of see, and you can do it across the different currencies, and they've got different, different back-end systems that you can go into in terms of the process. So he is actually going to share a link for all of you so that you can actually access this for 14 days. But I find it extremely useful. I can go in, I've got the US dollar, I've got the euro, I've got the pound. I can go into the different currencies and compare the different ones to each other. So I find it very, very useful. Saying all of that, I'm not a short-term investor, so I'm not trying to be a day trader. I'm not trying to like buy rand or dollars or pounds or euros. But what I do think becomes very important is long-term trends. So again, if you're thinking of investing in America versus Europe and you've got $100, you might want to consider putting $50 into Europe and $50 into America based on the whole currency and where the dollar is going in comparison with the euro over the next 5 to 10 years. And that stuff becomes really, really important. James, if your camera's not working, I reckon we just rock and roll without your camera. Because I think what's more important is the insights and your knowledge than your face. If you can hear me. So you just want to unmute yourself there. Cool.
There's Scott.
Yeah, so look, my suggestion is if your camera's not working, let's just rock and roll, and you can present without your camera. We can see you there. We know you live. It's not an AI.
Yeah. Can you hear me?
Yes, now we got you loud and clear, yeah.
Yeah, I don't know what's happening with this video. It seems to be just kicking.
Well,
oh, there we go.
Seems to be working now. Okay, well, I will shut up, James. And yeah, look, if it's not working, please just continue. I'm going to hand over to you. And yeah, I'm fascinated by what I'm about to learn. So let's rock and roll. Sure, gotta love technology when it works. Boom, 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 boom. James, where are you, dude? Are you there? Always find this ironic. James is sitting in America, so arguably the first world capital of the world, and is having technology and internet problems.
Can you hear me?
Yeah, I got you now. Yeah.
Okay. That loud and clear.
Yep, we got you loud and clear. Yep.
Yeah, technology. Yeah, so where are we? Do you want me to just dive?
I think I've given enough of an intro, James. I've told a few stories about some of the experiences you and I've had. I've known you now. I don't know exactly, but I do know it's a hell of a lot longer than a decade because we wrote the book in 2013. So it's a lot longer than that. And so it's probably close on 15 years. But my suggestion is based on the timing is let's just rock and roll. It's already, we're already quite a long way in.
Okay. Right. Let me just pull up my point here.
I'll switch off my screen in the meantime.
Okay. Share my screen.
Still not seeing your screen?
That's got, yeah, just, it's just taking a bit of time to open this up here.
Sorry, what's it doing, James? I can't see. We're not seeing anything.
Yeah, just battling to open this, you know. Let a restart, yeah. I don't know if you can see my screen, but I'm trying to,
Okay, we've got your, it says document recovery.
wonder if something happened when I restarted, yeah.
Maybe just restart. Maybe
So let's just restart PowerPoint.
yeah, restart PowerPoint because just note to self, highly recommend this for you and for everyone else. At 6 p.m. this evening, which is an hour before the presentation, I've shut down my entire computer, restart the entire computer, and only open up what I need for the presentation. I always do that just because it's the best chance of not having these challenges. Okay, there we are. We can see your screen. If we put it into PowerPoint mode, we should be good to go.
Right, let's get going.
Down the bottom right-hand side, James, you'll see there's a little slider. And just to the left of the slider, there's a little icon that looks like a, I don't know, hourglass, half hourglass. If you click on that, it puts it into PowerPoint mode, slideshow mode. So down the bottom right corner, yeah, there, that. No, one right. Yeah, that one.
This one.
Yeah.
Okay, so that is there, but I think I just need to, I think this is now, this on the right screen now?
Yeah, now we're good. So we're literally seeing your screen now. So I'm going to switch off my video because there's no point in seeing me.
Okay.
Yeah.
Okay, well, I think we can skip through the intros here. You've done enough of that, but just, you know, what we've been doing since 2005, basically forecasting currencies for exporters, importers, and investors. I think we met in about 2008. I think, Scott.
It's probably about right because I came back from London back in 2007. So yeah, it would make sense. So, you know, 15 years then would make sense. And I think, you know, just so that just so you know, everyone's sort of saying, you know, don't stress, just like no one's going anywhere. So just rock and roll, dude. They're all here to hear your wisdom. So don't stress.
Good. Right. Well, what do we want to share with you today is 3 secrets to successfully timing the markets, and then our updated view of the US and global economy, which we covered, I think, a couple of years back, and our updated outlook on some stocks, currencies, cryptos, commodities, bonds, interest rates, and real estate. you know the story. It's not you're not giving any advice here, just providing information, but hopefully valuable information that you can use. So let's just dive in quickly, you know, to kind of set the whole platform in terms of what we want to share in this class is our 3 secrets that it's, you know, it's my journey that's led me to these 3 secrets for successfully timing the markets. The first one is understanding the hidden engine in the markets. And then the second is discovering what your Achilles heel is. And it's the same for all of us. And the third one is the key to making the right decisions at the right time. So if you look at the first one, that there is an underlying hidden engine in all financial markets that create repeating cycles and patterns, which enable you to anticipate future moves and benefit from them. And contrary to what most people think, that the markets are not random, it's not chaos theory, and it's not like most economists do. They simply project the past into the future using fundamentals. But they're the result of this hidden engine, which often appears irrational, but there's some predictability to it. And so I think we've done this before, but I'm sure there's some that haven't seen this, Scott. But you know, when most persons look at a market, financial market, they think of it like a seesaw, where you have positive factors and negative factors. Some are bigger, some are smaller, some are more positive, some are more negative. And you have this seesaw and a balance at any point in time. And those factors can be economic, financial, political, or social. You know, whatever data and events, news that is coming out. And what the fundamental analyst does, and this is kind of what I did right at the beginning back then, was you looked at this information and you said, well, we've got, say, for instance, non-farm payrolls coming out. And if it's more positive, well, it's going to push the positive side down. And if it's more negative, it's going to turn events negative. And you know, that's how most people look at the markets. But the fact of the matter is that one event is not, you're not taking everything into account. And it's impossible to take all those factors into account at any one point in time. I mean, there are just thousands of factors of information and, you know, fears surrounding those as well that you need to factor in. But what the market actually isn't all these various data, events, and news. It is a seesaw, but it's persons. Persons move the market, not events. So you as investors or as businesses involved in export and import, you or, you know, buying financial assets, it's you taking action that actually moves the market. So it's these persons looking at this information and deciding based on what happened. If they turn positive, the market will turn positive. If they turn negative, the market will turn negative. So it's not the events themselves, but it's these events filtered through millions of persons involved in this market that actually move the market. And what happens is, at any one point in time, all these factors filtered through all the persons active in the market in their time, whether they buy or sell or stay out, gives us a price, one point in price at one time. And as you know, that actually moves over time as we've got new information and persons involved in that market. And there we get the market moving as these persons make their decisions and take action, whether it's to buy, sell, or sit out. Now, most persons, when they look at this market, at any market, whatever it is, they look at this and say it is a reflection, a mirror of what's happening here. But it's not. It's this information filtered through this whole crowd gives us these market patterns. And what we have found out through studies is most of our decisions are 90% emotional. And therefore, these are patterns of mass human sentiment that are playing out in the market. And we tend to do the same thing in similar circumstances. So those patterns recur in similar situations. And therefore, there's some predictability about it. So we've spoken about this many times before, but it's similar to weather patterns. Where you've got weather patterns, why is there some predictability about weather patterns? How can weather forecasters forecast what's going to happen with these hurricanes that come through, what their wind speed's going to be, what their path is going to be, what the storm surge is going to be, so on and so on. It's through understanding that they're governed by the laws of nature and that they recur repeatedly in small and larger degrees over time. So you can see here these weather patterns recur. And because of that, and understanding that, weather experts can predict future movements. And it's very similar with us as humans, that human nature is predictable. The very interesting book here, which is well worth reading, about the human forces that shape our decisions, predictably irrational. And that's just what we are in financial markets, is that we often react irrationally, but very predictably. And that's because we're governed by the laws of human nature. And we intend to do similar things in similar circumstances in smaller and larger degrees over time. And therefore, there's some predictability about it, although very often irrational. And we'll show you some examples of that as we get into this. So what I just want to show you is that, if you look at any financial market, just like in nature, you've got degrees, cycles in nature. You've got annual cycles and longer than that. You've got monthly cycles, the moon waxing and waning. You've got daily cycles. You've got intraday cycles, eventide, and you can go further out than that, longer term cycles. But it's so with us as humans as well, there's different sentiment cycles. So, we might feel better about a market than we did a year ago, but not as positive as we were a month ago, and yet more positive than we were at the beginning of the week. And because of that, you've got these different cycles that play out. So if we look at any market, we can have a trend, and then we can have a longer term cycle and a medium term cycle and a short term cycle. Now, what happens if we add all these cycles up together? What we get at any point in time here, as we just trace that through, is a resultant composite pattern, which is exactly what is playing out in financial markets, as we have these long-term sentiment cycles, medium-term and short-term playing out over time. So you can see they lead to lows and highs in smaller and larger degrees. There's a large degree low, large degree high, a medium-term high, a medium-term low, and then smaller ones within that. And that's how these patterns play out. So if we look at just an example of here's gold going back to 2021 or so. Yeah, 2021. If we look at what cycles are active in this market at the moment, we've got what we call a spectrum analysis. And this shows that we've got, on a daily cycle, we've got a 266-day cycle, a 107-day cycle, and a 40-day cycle. And if we put all of those against this, we combine all of those, now that the trend of this has been taken out. So it's not exactly, will give us well, it won't follow exactly, but we can see that it gives us pretty much where these highs and lows are going in terms of the longer and shorter term cycles. And that is one of the things that we use to actually give us, together with, our Elliott wave analysis, which is understanding the laws that govern these actual patterns in relation to each other, and sentiment and momentum studies. So we use that as a combination to actually give us our forecast. And what we found is that if you look at how the markets actually move, that as we showed, they're off fractal in nature, but we tend to get a trend and a counter trend. Trend in 5 moves and a counter trend in 3, and then a trend again. And we can use that to therefore find out where we are in a market, and based on what it's done before, where the market's going to go in future. So here we can actually see an example, I think, of the Rand, where we can see the longer term trend, the more medium term trend, and then the shorter term trend. So it is like we can use that to our advantage. So here, back in 2020, we actually showed the market was expected to head down to this area based on previous patterns. It had been trending up, had gone right up here and then retraced. So the longer term trend was up. But what our analysis showed is that the longer term trend had turned, and based on where we were there, we're expecting the market to head down. And that's exactly what happened. Another example of the euro, we saw the market was down. You was expected to head up into this area, and they could have another dip down, or if it broke above this level, we'd go higher. We can see the market tested that level there, dropped down, and then went higher. So that's just giving you some examples of how we can use that information, and have done it for the benefit of our clients for the past, going on almost 20 years now. But it's very important to understand is that it's one thing having been able to determine where a market's going, but you can know that and still get it wrong every single time, almost every single time. And the reason for that is that irrationality we spoke about, is that we need to understand that irrationality. We need to understand our Achilles heel, because we all tend to do this sort of thing. And that's critical in helping us invest or trade with greater success, clarity, and confidence. So I think you had spoke about this, Scott, back in 2013, where I showed this chart, and we forecast the market was expected to go up to the sort of 10 area. And that's exactly what it did. But yet, not many people took action.
Well,
and the reason for that,
the scary thing is, I would say not even less than 10% of the room took action.
Well, the reason for that is, if you look at the prior trend, this is where we had come from. We'd had this peak, it had come down, it come down sharply again. We'd had this bit of a recovery. So what were persons thinking? Well, we're in a downtrend still. But our analysis had shown we actually had bottomed out here and we're heading higher. But at this point, most persons are saying, oh, we're probably heading lower again. And so they discounted that objective information that was telling them something opposite of what they themselves were feeling. And that is the problem at these points, because if you look at, and just from a South African point of view, this chart here, which we showed many times, is, yeah, we've got the black line is the rand, dollar rand, here weakening. At this point here, when it was weak, everyone's taking their money out. This is the net investment position, this blue shaded area. And this shows that more persons are taking funds out the country when the rand's weak and bringing funds into the country when the rand's strong, doing exactly the opposite to what they should have been doing. And so it's something that we tend to do. It's how human nature is that we buy when we should be selling, and we sell when we should be buying. And I don't think I've got the slide here, Scott, but I mean, that's where I came on this journey. Was we had that exact experience in 2001 where, the market went from 8 to 1385 in a few months, and we managed offshore investments for clients, the only available one back then. And at that point in time, we had dollar proceeds coming in that we had to exchange for our clients. And we sat down and said, oh, everyone's saying the rand's going to 20. So, we'd look stupid if we'd lock some of our funds in now. But we've got shipping costs, so let's lock those in. And the rand was sitting about 13 at that time, and within the next day it was down to 12, and a couple of weeks later down to 11, and a few months later down to 10. And I think, finally we got out of some of those contracts at about 850 or something. So it was my own experience, but I wanted to find out why we tended to do that, and how we could avoid it. So if we look at why that happens, that when we're at a market low, we tend to panic in ourselves. The market has come down, it's going down further, and we had extreme panic, and the market then starts turning, and we start getting less panicky until we get to, the market's rising a bit, and I get a bit neutral, and then market rising, I'm starting to get more hopeful, and then a bit more greedy, and I finally get in here, and then the market rises, and I become extremely greedy. And it's at that point I should be selling, but I'm now greedy, and so I don't. And then the market drops, and I start fearing again. And then it rises, and I start getting a bit hopeful, and then it drops even further, and I get back to, absolute panic stations again. And that is how we tend to react in relation to markets themselves. And it's not just ourselves that we're fighting. If you look at that seesaw, everyone is negative. So everyone you talk to is negative. It's not just me. It reinforces what I'm feeling. And at this point, we kind of tend to be neutral. And at this point, everyone is positive. Everyone I talk to is positive. I mean, look where the market's gone to. It can only go further. There's no one left to turn negative. And so the market turns and drops down again and drops down again until everyone's negative. And there's no one left to turn the market negative, because we've all taken action. So we can understand, what's happening here is that at these extremes, I'm feeling exactly the opposite of what I should be feeling. I should be feeling positive here because here's an opportunity. I should be feeling negative here. There's this opportunity to sell, positive because the market's gone up, but this is at the point I should be selling and buying, but I'm doing the opposite. And that is the problem, is that, our emotions are the enemy. So if you look at, I don't think I've shown you, Scott, these recently, but here's proof. You can look up, there's a fear and greed index or meter. CNN has one for this is stock markets. And on the top here, you can see it goes up and down, up and down. So it's gauging the fear and greed in the market at any point in time. And you can see that when there's greed, we get into a market top. When it's coming down to more a fear, we get into a market bottom. When there's greed, we have a market top. When there's extreme fear, we have a market bottom, and so on. So this shows that everyone, we tend to act like a herd in these sort of markets. And so it's you and everyone around you. Here's another example of a put and call option, which is effectively persons taking bets on whether they expect in the market to rise or fall. So here they're saying they expect in the market to rise, so they want to protect themselves. Sorry, expecting the market to fall, and here it hits the bottom. Here they're expecting it to rise, and we hit the top. Sorry, no, this is the other way around. Yeah, expecting the market to fall, but the market rises. Expecting the market to rise, but the market starts falling. And here again. So just another example. And then there's also a crypto fear and greed meter. And we can see if we trace that against Bitcoin, that where we have these extreme lows, we actually need to get an average of this, to get all the noise out. But effectively, we've got lows happening when there's extreme greed, and highs happening when there's lows happening when there's extreme fear, and the highs happening when there's extreme greed. So that is, our Achilles heel. It's mine, yours, everyone's, is that we tend to be doing these things at the wrong time. And the answer to that is actually we need to be fearful when others are greedy, and greedy when others are fearful. And the same for myself. So your emotions will more often than not conflict with how you should be taking action. That's always so, especially at extremes. And the more people you talk to and feel the same way as you, the more likely you will be making the wrong decision. The more likely the market is peaking. And often when it hits the front page of magazines, newspapers, then you know that it really is getting to a peak. So when there's virtual consensus, which is when it gets to the newspapers and so on, as to where market is heading, the trend is exhausted. So the bottom line, if you're taking action contrary to your own emotions and those around you, you are probably making the right decision. And that's what we find time after time, is we need to fight our own emotions in making financial decisions. So I don't know if that provides some clarity there so far, Scott.
Excellent, because I think what you're doing is that for everyone, and I know a couple of people have said, okay, well, what does this mean for me as an investor, and what is, where are we going? And to some extent, Damien even said, I don't want to be a day trader, so how does this impact me? And I think I'll answer it in 3 different ways. The metaphor I've always used for you, James, is that you can get super complex and you can go into all the details around how you do this, and it's kind of like the weatherman explaining how it all works. But I don't actually really care how the weatherman works. I just want to be able to look at my app and to know whether tomorrow is going to be sunny or rainy, because depending on what, that helps me plan my life. And I see it in a very similar way, basically. So that's my first point. My second point is what James is doing here is sharing with you the fundamentals, because you know, it's at least important to understand how these patterns work and how the pattern recognition works. And he's about to go now into the key to making the right decisions. And then we'll go into, you know, him giving you the information. But if he just gives you the information and you don't understand how it's curated, then you're probably going to think it sounds too good to be true. And you're going to be like 90% of other people that over the last 15 years have come back to us multiple times over and over again, James, and gone, I wish I'd listened to you. And that's what we're wanting to change, by giving people the understanding of how it's working so that they can be empowered and use the right decisions for themselves going forward.
Yeah, that's it exactly, Scott. I mean, I'm not going into the detail here, but it's very, very important to understand, firstly, get some understanding of how the markets work, that it's related to sentiment. Sentiment drives the market. And then what I tend to do in those markets, what I tend to do is the wrong thing. And unless you understand that, you can have all the right information, but you're not going to take action because you look outside and you say, well, it's sunny. And I've spoken to everyone around you and said it's sunny. And Joe Soap says there's a storm coming through tonight. Well, you know, that means nothing to me. But if you understand that Joe Soap is using, you know, some information that's based on past patterns, and that, you know, I tend to make the wrong decisions by looking at the sky myself, well, then I'll listen to him. And so that's really what I'm trying to share you is, you know, those three keys, making right decisions. And that's not for day traders. You know, we're talking about long-term decisions, medium-term decisions, short-term decisions. It's all based on those cycles.
Yeah, no, completely. And I think a couple of people who asked about the fear greed index. I don't want to steal your screen, but I've actually found the CNN one. I have put the link in the chat box for people. It's really, really interesting. And to answer Vernon's thing, we're in a place of fear right now, both
Yes.
in alternative assets and in the stock market. And as Warren Buffett said many times, you know, things like, you know, be fearful when others are greedy and greedy when others are fearful. And, you know, we've all heard these comments, which are tying in 100% with what James is saying is, don't go with market sentiment, go with the facts, the figures, and the fundamentals, because it'll help you make better decisions.
Yeah, I mean, I could have put those up there. I should have, I mean, where those are at the moment. Yeah, so what I'm going to do is, you know, just go into some of the key to making those right decisions. And then from there, you know, we'll then just perhaps you give an idea of where you can try some of these out for yourself. And then what I want to then give is just our overview on the economy and forecasts on our various markets. So the key to making right decisions is having the right information at the right time. And then, of course, taking action on those. So what that requires is a forward-looking view that will give you the information you need to make those decisions, and not making them on gut feel or emotions and so on. That's something to offset that. So, and then you can use the fact that your emotions and those around your country as a confirmation signal. And then, of course, you need the discipline to take action despite how you're feeling. And it's very important to understand that more information doesn't mean better results. So, I mean, I used to do this, you know, phoning around, looking up what's going to be happening, what news is coming out, this and that, and the next thing, and the fundamentals. And actually, it just confuses us more than anything else, because rubbish in is rubbish out, and multiple opinions, more often than not, create confusion and indecision. And also, you know, the economists' information after the fact doesn't help. You know, the rand moved because of this, gold moved because of that. That doesn't help anyone. You need that information as to where it's going to move, you know, when you can actually take action on it. And then, as you said, you can get the long-term trend right and still lose money through buying and selling at the wrong time. So key questions to ask in terms of a system is, where's the market that I'm considering likely to head in the time frame of my investment, or whatever it is, my window period, based on a scientific objective view. And then when is the right time to enter and exit that market within my decision-making window? So this is something that, we look to provide clients with, but, any system should have this. So it's what is the trend direction? So yeah, the gray line, we're saying the trend is going up. And in this degree, it's also going up. The blue line, we're expecting it to head up. And then we say, well, how far is the present trend expected to extend? You should have some idea of, where that's expected to head to. And then at what point is it primed for reversal? Because no market moves in a straight line. And when it is primed for reversal, we should have a heads up as to when that is so. And then thirdly, or fourthly, at what point is this assumption wrong? So, that's what we give our clients. We expect in the market to head to this area, but if it drops below this line, then this outlook has changed. So that's what any objective system should give you. And what that allows you to do is then take advantage of these moves. So, you've got the longer term trend, you've got the medium term trend, and the short term trend. And yeah, you can take advantage by selling here, buying here, selling there, buying here, selling there. And this is a big sell in terms of the more medium term, down, buy, sell, buy, and so on. So it's getting the trend right and then getting an optimum point within that trend to get in and get out. So that's what information should give you. And so just to give you some historical examples, the back year 2019 with Bitcoin, the market is sitting at 3,900, and we forecast a move up into that 5 to 351 over the next couple of months. But then over the next year or so, we're expecting a move up into, I can't see it there now, but that was about the 60, here we are, 43 to 66,000. And of course, we know that that is what happened. The market went to that 67,000 or so. Another one, gold. We've expected the market to move down into that area. In March, we're sitting up here. And then October, we actually moved down into that target area. And then we bounced out of that target area and moved up 17% or so. So, just by having these forecasts, you could have got this sell right down into this area, this buy right for the move up. Another one in Bitcoin, where we're expecting a bottoming out after the market had hit that 69,000. And we traced all the way down into this area where a lot of persons were negative at around here when we're sitting at 16,500. We were forecasting the market to bottom out, which it did. And then to dip and rise again. And we've seen that. And of course, we've seen a lot higher. Should have updated our charts, but well, I mean, we don't need to update. I'll give you an update of where we've seen Bitcoin going. But as you can see, we've been tracking the move since that low all the way up. So I don't know if that can help you see the power of the sort of information, or that this information can give you. But what some of our clients have said, allow me to make the right decisions based on fact, while passing emotional advice offered by many bone-throwing economists, and so on. We got many clients that have benefited from this information. And what we found ourselves and our clients, that instead of floundering around in a sea of unknowns and missed opportunities and regrets, and lying awake at night worrying about these things, you have the time and energy to focus on your core business and the things, persons that are important to you. So what I'd like to do before we pivot is to ask, would you like to test this out for free? Because we've got two opportunities for you. One is our global market forecast, which is the dollar, euro, gold, and Bitcoin. That's updated twice a month, together with live pricing and charts, with rate alerts and direct access by WhatsApp, live chat, email, and phone. So what we're offering there, with all of those, so 400 value, 250 value, the long term. We've got a medium and long term, and then the near term, and the live charts, the rate alerts, and direct access to us, plus how to use a forecast to advantage tutorial. We're busy working on that. So 1,350 value, plus our 60-day guarantee. And what I'm wanting to do is say, nothing now, but you can get it free for 7 days. And then after that, 39 a month or 390 a year. So effectively 2 months free. And that's dynamicforexsolutions.com/go/free trial, free-trial. And in addition, if any of you wanting something on our RAND forecasting service, there's also possibility of a free trial on that as well. So both of those, that's forexforecast.co.za/go/free trial.
We'll send an email out, James, post this.
Okay.
With a link for everyone, so they've got those links
Okay.
if they want to.
Okay, great. All right, so what we'd like to do is give it a try, see what you think, without any commitment up front. So from there, let's just now dive into this as to where the global economy is going. There's a lot of political uncertainty, economic, financial, social. It's quite a melting pot at the moment. But I think we covered this before, and I'm going to update it, that we've got a massive problem globally, and that is debt. And you've got governments adding to that debt on a scale that is mind-boggling, trying to fix the problem by adding to the problem, which is not going to help anybody. So if we look back here at total US market debt, so this is government debt. It's commercial debt. It's individual debt. It covers everything. It's not just the federal debt that a lot of persons look at. That's sitting at just under $100 trillion at the moment. Yet you need to put noughts to that to get some idea of what that is. But that's a phenomenal amount of debt. And then if you divide that by the GDP, so here's the GDP, you can see we're currently sitting at 354% of GDP. We can see we had a peak here at the 2009 crisis. We had another peak 2020. Now, if you compare that to this peak here, which was the peak just before the Great Depression, which actually peaked a bit afterwards, I think. That's sitting at 258%. And you can see what happened here over the next 10, 15 years is this dropped all the way down to, I think it's about 130%. So that basically halved. But now we're sitting with debt to GDP way higher than this. So this, if this was unsustainable, this is even more unsustainable. And here you see we had a peak, and here government tried their best to kind of keep things going, but it's starting to roll over here. And so, you know, we're heading for a big adjustment in terms of credit and debt. And you can see it's starting to happen. You know, if like back over there in China, some of those big real estate collapses, and the whole banking industry and so on. So we can actually see the whole credit system is starting to have its initial jitters. But then if you just look at federal debt, yeah, we can see how that has climbed dramatically the past 4 years or so. I mean, we were going up, but I mean, it's just been, but this is as a percent of GDP. But then if we look at the interest payments, so back here in 2021, we were sitting about 350,000. We are almost double that in interest payments. Actually, interest payments have doubled, which is unsustainable. I think what we're looking at is those payments are basically the GDP, getting close to the GDP of US. So effectively, you have to work for a whole year just to pay off the interest. That is a huge red flag. And then, you know, if you look at down to household debt, we can see how that's also climbed this 2014, 2015. So we're sitting with, you know, debt across the board. And globally, a similar situation. Some of these countries are not as bad as others, but if we look at especially the Western world, we're sitting with a massive debt problem. Western world, and then of course China and India, China and Japan also considerable problems. Global debt has continued to swell. I actually was trying to update this, but I didn't get a chance. But it just shows that, you know, household, non-financial, corporate, government, it's a problem that has exacerbated. And then, you know, you've got government then trying to print money to keep things going. But has it helped? This was from a 2020, seeing what we're looking at back then, that this is velocity of money. So it's how often a banknotes changes hands. We can see back here in 1929, or with the Great Depression, it came below 1.25. And here back in 2020, we're hitting the lowest since 1949. And what happened since then is we actually dropped right down to actually was below almost 1.1. And since then, we have been climbing, but not to the levels that are comfortable yet. So, you know, printing money hasn't helped the situation because persons aren't actually spending it. We've seen a bit of spending here again, but persons have been not spending like they should have. So that's just an overview, is that, you know, the whole market is in trouble, you know, and we got, I mean, here, like the US Congress still sending money all over the place but it's money they haven't got. It's money that they're borrowing. I mean, it's absolute madness. But the bubble is going to pop, and it's going to be sooner than later, I'm afraid. But the question is, what does that mean for financial markets? Well, let's first just have a look at sentiment and volatility over time. What we've got is the volatility index, the VIX. And if we take a look at the VIX, just do this here. That's better, yeah. Yeah, but we got the volatility index, which on the stock exchange. And what we find is that when volatility is high, the market falls. When we get an increase in volatility, we get these big crashes coming here when the market see these highs in volatility. But then if we do our cycle analysis and we look at like the Dow Jones for the longer term, we can see here, this goes back to 1994, that we've got the cycle that has pretty much got the lows and the peaks, the lows and the peaks, the lows. And what it is showing is that we've had a low in volatility, and we can expect the market to start heading higher over the next couple of years, which means that we should expect stock markets to fall. And then if we've got financial stress index, financial stress index, we can also see when, I should have put that against it, but where we've had stress in the system, if we put that against the Dow Jones, we can see the similar things where we've had extra stress, we've had market collapses. Now, what this is saying is that we actually have had, and we might have some dip before we have some more upside. So there's a bit of a discrepancy between the two. And what we're going to do is to kind of use that to kind of show out where we're expecting these markets to go. So if you look back at 2020, a 2020 forecast, I think when the market had fallen, we had said at that point that the market had likely topped and we expected to head lower from there. But what we also said, sorry, there's just a chart behind here.
What is DGIA? Dow Jones, but what does IA stand for?
Industrial average.
Okay.
Yeah, so you actually get the Dow Jones transportation and the Dow Jones, another one as well, utilities as well. But we said there's a small chance we are here, but we're most likely here. Now, what it turned out is the market hadn't topped yet. And we saw a turnaround and head higher. Now, overall, if you look back, this whole period, the market, we spoke about that 5 waves. What we've seen is a 1, 2, 3, 4, and 5. And we're in the 5th of that 5th wave, and possibly in the 5th wave of, one that goes back a couple of centuries, I think. So we're in a super topping phase here, and it's a question of how far this can go before it actually rolls over. But if it does, I mean, not if it does, once it does, just taking from current levels, we're expecting to go down at least to here, most likely to here, which was a 2010 low, which would be an 84% drop. If you compare that to the stock market crash, 1929, it dropped there about 90%. So here would be 84, and next level down would be this level here, which would be 98%. But I mean, obviously that would be over a period of time, but just giving some indications of what the potential is based on these different cycles. Once that does roll over, we're going to be seeing quite a dramatic collapse. So here's something from middle of the month showing those 5 waves up, that just in the shorter term, in terms of our cycles, it's looking like we are in a topping phase right now. But then if you look at the longer term cycles, it still seems like we could have another push higher. And we also need to see a proper 5-wave move, a full 5-wave move higher here. So the market hasn't stopped. It hasn't reached its peak yet, but we are expecting, that to happen in terms of a final fling up over, maybe the next year, I guess, before we see a topping over and collapsing. And that's the same for, the South African market as well. This is the top 40. And I'd imagine, I haven't looked at some of the other stock markets, but what it's like if the US market collapses. It's kind of, if you are heading into that degree of a collapse, it's going to suck everyone into it. Yeah, so that's a big picture in terms of stock markets. Now, if we look at commodities, precious metals and commodities, and one of them that we look at is gold in our global forecasts. And there, if you look at our longer term picture, we're expecting a topping out middle of the month here. And then this 2146 being pivotal. But if we didn't bounce out of that, having another high before completing this 5-wave move up here into this area. And what we have seen so far is the market falling, expecting to hit into this target area, and then this area being pivotal. So we are expecting more downside for gold, but there is the possibility that we could see still some more upside once that completes. In terms of our cycle analysis, we can see this is showing a few months of downside before we possibly bottom out and have another push higher. Silver, a bit of a similar picture, but what we're expecting in the long term is for silver to head higher into this 45 to 85 area. But then once it has done that, we're expecting quite a dramatic drop off. And that's probably going to happen in gold, to have quite a substantial a correction once we reach that target area. Crude oil as a commodity, we've seen this move down in 2022 to 2023. And since then, we've been going in this like a contracting sideways move. Once that completes, we're expecting oil to drop quite dramatically. So if we just take this move down, and from here, if it was just from there, we're probably expecting a move down to sort of the 20, 25 sort of area, which is good news. And then currency forex markets. Obviously, the big one that we're looking at is the dollar. As you're saying, Scott, we're expecting the dollar to top out, and then fall quite sharply. This was our June 22. Let's go back. This is what we were looking back in June 2022 for the market to have it topping out in the area and fall. Now, what we went up to about 114 before topping out, and now we're in this move lower. We've had this move down, and we're busy in some sort of consolidation. Our cycle analysis is showing that we expect it to head lower, which is confirming. On a more near-term basis, we've had this move, 5-wave move lower here, and then this sideways move, and we expect we could have some more upside here, but once that rolls over, then it's over for the dollar. In terms of long term, we should have this move down again, just as a start. So, in the short to medium to near term, perhaps a bit bullish, but then overall, expecting the market to fall. Looking at the euro, it's sort of a flip side of the dollar, expecting the market this back in 2020, June 22. We're expecting a bottoming out there, which, if you update this, seeing here. Got the update for that. And just pull it in here quickly.
I think it'd be lovely to put in the euro, because I know there's a lot of our clients that have been on, investors that have been with us for many years, a decade plus. And again, we've helped a lot of people do a hell of a lot in America. And I found this fascinating. And, as an example, on the Wealth Migrate platform now, through Calio Private Equity, we've got German income producing, mixed use deals. And one of the reasons why I believe this becomes so important for people to understand is that we always say you have to diversify across countries, currencies, assets, partners, and time. And this is a classic example. It doesn't make the US dollar bad. It just means don't have all your eggs in one basket,
Yes, exactly. Oh, it's in here.
I know just while you're putting it up, I know for the Mastermind members, you did that presentation for them, and well, I found it amazing, and I got a lot of positive feedback from that, because again, as investors, based on everything you've already said, it helps us so much when we're trying to make investment decisions. And again, back to, I forget who said it, it's not about being a day trader. And even Menno said, you invest on a monthly basis with dollar cost averaging. But it is quite important, if you know what these long-term trends are within certain markets, certain currencies, to be making long-term decisions, where you can ride that wave. And a good example is that euro to the dollar. There, I can see it now.
Yeah.
You there?
Yeah. My I'm just trying to resize it here.
Don't stress, dude. I mean, I think let's rather talk to
Yeah,
it. Don't worry about resizing it.
yeah, so there we go. So there we can see compared to 2022, the market bottomed out at 95, and then we've had this push up, correcting, and then we're expecting to head higher.
Just
Similar to the
just to put in perspective here, James. Sorry to butt in, but just to put in perspective.
yes, no,
And you know, I've asked you this before, but if you look here, can you just point to the line where it says breaks below invalidates 0.95? Okay, so there,
yes,
kind of see that at the moment the rand, not rand, sorry, dollar to euro is kind of sitting at parity, almost 1-to-1. Okay, and what they're saying is that over time, and you can see that trend analysis, over time it could lose anywhere between sort of 25% of the value right up to 60% of the value. If you look at that, like that long red line there, and then down the bottom also over time, you can see 2025 right through to kind of 2028, 2031. Sorry, James, I can't point because it's your screen. I can't point my mouse.
yeah,
I'm just trying to show people how to read this long term. Like back to that gentleman that asked the question, you know, am I a day trader? No, I'm not here. I don't care about day trading. We invest in alternative assets that generally are 3 to 5 year, you know, and longer. And so these long-term trends become really materially important. It's not about trying to buy or sell the currency within the day or the week, you know. So
no, yeah, it's a point of getting that long-term trend right, and then we said, you know, when is an optimum point to actually get into that market. So when here we had this move up, we've now had a correction down off there, but you know, from here we're expecting to go up to 23, so 25%. You know, change in or reduction in dollar value. And then, as you're saying, if it breaks above there, you know, we very likely are heading up into this sort of 160 area. So quite a dramatic change. And, you know, we're seeing that probably across the board. Obviously some more than others, but, you know, with majors, that sort of situation, with dollar weakness coming in. So just the more near term, we've had this move down. We're expecting to head a bit lower, which can be a window of opportunity to actually get in if you're going to be buying some euro assets. Pound, a similar sort of situation where the market has pushed up after having completed this move down here. And once that correction happens, you know, we expect in the market's head up to that 142 area at least, if not higher. Aussie dollar against the US dollar. In the medium term, a similar situation, but we could be a bit different here. I mean, we've had this move from this high down, and you see this 1, 2, 3, 4, 5. Now, more often than not, we should then have another 5 wave move down. But now we've had this correction, and so we should see a move up to this sort of area over the next couple of years, before the market rolls over. So, you know, there is some opportunity on the Aussie side for the medium term. And then the rand against the dollar, our long-term outlook. We've had this move up, and since then we've been tracking sideways in a more and more narrow triangle. And normally when that happens, we normally have a breakout to the top in a final move higher. And so that is what like our primary preferred outlook is. But if we break below that 1740 level, then that negates that, and we're heading lower. But overall, what we're going to be seeing is that the rand itself will benefit from the dollar weakness going forward. So there might be some rand weakness in itself here, like into elections and so on, maybe a bit after. But then we're expecting it, the market to roll over. And this gives us some insights here that the black line is that sideways move. And here we're showing that we're likely at a bottom or close to a bottom in that area. If we look at our analysis here, we've had this 1, 2, 3, 4, A, B, C, D, E. And it's a question of whether we kind of keep above these levels or whether we're going to see a deeper move before we climb higher. But overall, we're still looking for some rand weakness in the months ahead. That was analysis, cycle analysis there. So that's the rand against the dollar. Against the euro, it's a similar situation where we've had this sideways move here, which the bias would be for a move higher before topping out. But if we break below here, obviously it means we have topped out here and we're heading lower. And the pound is a similar thing. We've had this move up and then a sideways move, with the bias being for a move higher before topping out. Alternately, that we'd see this move that's continued down into the sort of 2220 area and lower. And then cryptocurrencies. Going back to, we did have a look at Bitcoin earlier, but just having a recap, March 2020, we were expecting a move up into that 43 to 94 area. The market is sitting at 62, 65. So we had a forecast back here and then another one back here. We were expecting the market to head higher. And then almost 2 years ago now, market sitting at 21,500 or so. And we said as long as it doesn't break below 13,880, we're expecting the market to rise higher. We can see it bottomed out at 15,479. And since then, we've been heading higher. And we're still expecting a move still higher into the 95 to 375 area, with some levels here that we'd need to break, and obviously need to track how that wave count. And our cycle analysis works at this point in time to see how far we go. But something that's interesting is Bitcoin has these halvings where the reward for handling those exchange contracts for mining, that it reduces by half. And what that effectively does, or is limiting the amount of Bitcoin that is mined. So it's becoming less and less that is mined. And because of that, there's some scarcity about it. And I think the next halving will probably be, getting up to its almost full capacity. But it's just interesting what happens after that halving is, you can see back here in 2016 that the market rose after that halving. Again here, after a couple of months or so, the market rose. And yeah, we've had a halving where the market, and similarly, the market had risen, but continued to rise. Here it had risen and continued to rise. Yeah, we've seen it has risen. So, based on these past patterns, we can expect the market to rise further over the next year or more into this
James, just an
area. And we've that.
Sorry, actually, after just finish what you're saying, then I'll say what I was going to say.
Yeah, I just said at these sort of levels, we'd need to see with some of our forecasting technology how far this is expected to go. But it's a very big target area, we know. But when we're down here, 95 seemed a long way away now. It doesn't seem so far away anymore. You were saying, Scott?
No, I was just going to say, so, for our Mastermind clients, we actually did a analysis on crypto both back in February, so 2 months ago. And we put together a small little fund. It's not a fund really, but in simple terms, they've got the ability to invest alongside an economist, because most people don't actually know how to participate and take advantage of this. And it's just an example of, again, it's one thing to have the right information, which James is clearly showing you where it's expected to go, but most people don't know how to take advantage of that. And so you've got to have both the right information and the right partners to be able to execute on it. And it's just again, I'm just bringing real life stories to the table to show people how you can use the information and actually execute on it,
Exactly. Yeah, so that's a long-term outlook. Obviously, the market has dropped over the past couple of months, but we're still sitting in an uptrend, and we've just had a decent correction come and hitting this trend line, and expecting once that's completed for us to head back above 77,000, possibly to close to 100,000. So between now and year end, we should be seeing these sort of levels on Bitcoin. And then so I just include a couple of others. Ether also in a 5-wave move up. So that was 2022, and now 2024, we can see the market has risen from there, and we're expecting it to go further, basically riding up this trend line here. So Ether, we're also expecting that. Another interesting one is Ripple, especially with their fight with the SEC here. Back in 2022, we showed Ripple here having 1, 2, 3, and expected this market to track sideways for another 2 waves before heading higher. And what we can see, what has happened is that's exactly what's happening with this A, B, C, D, E, and we must be pretty close to a low here. And once that does happen, we should see quite an explosive move to the upside. So personally watching Ripple quite closely on this one, because that could be one that's quite interesting. I mean, if you have some settlement or something with the SEC, it could be, that just something that could trigger that blast higher. So interesting one there on Ripple. And then your area, Scott, real estate, just looking at the US, this is what we had back in 2022. We were expecting, we had average sale price of houses sold in the US, expecting a topping out there, which our cycle analysis, composite cycle analysis was showing. If we update that now, we can actually see the market has dropped off quite a bit, but what our cycle analysis is showing, it's got a long way further to go in terms of time, into 2028 or so. So
just to confirm, this is residential houses and apartments, huh?
Correct.
I just want people to be clear. There's a difference. Obviously, the two can be interrelated, but you've got to be careful between understanding that and then obviously commercial property. And there's different movers and drivers that move both. I'm not saying
yes.
Awareness.
Yeah, I was trying to find some information on the commercial in terms of a whole market, but I suppose it's a bit difficult, because here you're looking at, like average house prices is fine, but what is commercial? Can be a
Well,
completely different metric.
commercial is basically generally like that same metric is driven by cap rates, capitalization rates. And the point being,
Okay.
at the moment, because there's been this massive rise in interest rates and the capital markets have been in so much trouble, not only in America, but all over the world, but specifically in America, cap rates have gone up. And when cap rates go up, actually property prices come down. So it's the commercial property market is in a state of fear, if that makes sense, to use your barometer earlier. And, most people are running away or trying to sell because interest rates have gone up. A lot of Americans tended to buy very close to the line. So when interest rates go up, suddenly they get themselves into trouble, etc. So there actually are some really good buying opportunities. But again, you've got to have the right partners who know how to execute, who know how to fix the rates and the mortgages so that you're not caught up. But in simple terms, when cap rates have gone up, it shows that there's a lack of demand and appetite in the market. And when cap rates come down, there's a lot more demand. And over the last 18 months, cap rates have gone up significantly, which meant property prices have come down.
Yeah. I mean, that just in general commercial, I mean, it's a huge problem in the market with the whole change since COVID is, a lot more working from home remotely and that sort of thing. So that has affected the commercial market. I mean, you've got the Fed here worrying about it quite a lot, but obviously then it depends on what sector you're in.
Completely. Look, I mean, I think to this point, James, I mean, I literally have a challenge next week, and I'll go into this in a lot more detail because, for example, office has been impacted dramatically, whereas industrial logistics has been, the baby of the, the golden baby of kind of the whole thing, because obviously e-commerce has gone through the roof. We've got a very exciting sector at the moment in data centers, they always say in life, rather than try and be a gold miner in a gold rush, actually be the person who sells spades. And if you own a data center, you literally are the person that is renting out space to everyone, whether it's cryptocurrency or artificial intelligence or anything, So my point being is it like anything, and it's exactly what you're saying. There's different cycles and different assets, and you've got to get the right information and the right partners. But I've got a whole challenge about that next week. So, you and I there's all these. I don't want to overwhelm people tonight. Is about what I'm trying to say.
Okay, stick to the basics a bit. Okay, So just looking at house prices here. Family houses sold. You can see we've been in a downtrend here of interest. These gray areas here are periods of recession, US recession. And we can see that the market, when the market bottoms out, is in a recession. So here. And so based on that history, we haven't reached a low yet in terms of housing sold. So we see what we're expecting is this to continue down until the US enters a recession, and at that point will be your buying opportunity. So I don't know if you've seen that before, Scott.
Yeah, so I've seen this obviously from yourself, and what I always find fascinating, if I look at your graph there, again, I wish I could use my little mouse to point, but if you look at 2013, August 2013 was the bottom of the US market. August 2013. We literally bought within 3 months of the bottom of the market. It's when we started investing in American houses.
So basically what you can do is wait for a recession, and once you've had a few quarters, well then buy.
Correct. And also
even here we had the market come down in this recession, and then the market shot up.
And I think the point, all I tend to say to people is, anyone who tells you that any asset class is a great asset class forever is lying, because they move in cycles. So, I see people all the time tell me, oh, Scott, London's a great investment. I'm like, yeah, it has been a good investment at times, and it's been a bad investment. And whether we're talking American houses, it's the same thing. Markets move in cycles, and that's why you have to diversify. Because, I sound like a bloody robot, but countries, currencies, assets, and partners, and time, to be fair, because you've got to move within the different cycles. Medical, I've stood on stage telling everyone what an incredible investment medical is since 2010. And then, Black Swan event, COVID comes along, and medical's been a bloody disaster because, basically what happened was all of the people went into care for COVID with ICU, and all the ancillary services, all the elective surgeries got put on hold, and none of, they were our tenants, and none of them could pay rent. And many of the medical portfolios, just stopped paying dividends. So the darling of the industry suddenly became the nightmare. It just teaches me. I mean, I've made mistakes. That medical is one of my mistakes. And it just teaches me, again, diversify, because I can't see when these black swans are coming,
Yes, yeah. In every market.
Yeah.
Okay, and then just looked at it in too much detail, but we look at the US bond market. I think we were kind of predicting that low a couple of years back. The market has pushed quite a bit higher. We're expecting some correction off that, but then for markets to head even higher over the next few years. So it doesn't look like we might have some reprieve for a bit, but it doesn't look like this is over, because this is effectively looks like a 5-wave move up. And when that happens, it means there's a change in trend, and you should have at least a 3-wave move higher. So, I'm expecting the market to go, 7-8%, I guess, at least. But whether we have one of these again, I don't know. It's a bit scary. Up to 15. Yes, a bond deal has been pretty flat, but I think we should see it higher. But it's not a similar clean pattern. I need to do a bit more analysis on it, but I just sort of put it here just anyway. I seem to be doubling here. That bond here, there's our cycle analysis on the bonds, showing we're expecting some downside from that, but it should just be a correction before the market pushes higher. And then just to perhaps cover, maybe it should have been earlier, but the changing dynamics in currencies. I mean, we've got a lot happening globally where the dollar reserve currency status can be changing. We cover this a bit in the Wealth going global, but we've had the launch. I mean, we've got the BRICS alliance, which it seems they have launched a alternative to the SWIFT system, and there are quite a few countries, emerging market current countries, that are interested in using that. And then, of course, you've got effectively the petrodollar is no more. You've got the likes of China and Russia and India and some of the Middle East countries now doing oil transactions in their own currencies. So that is going to affect the dollar as reserve currency going forward. I mean, I've seen that it's time for that is over. But as you can see, it's still 58% of reserves are still held in dollars. So it will take some time for it to happen. But I see that happening. and the return to some gold or commodity-backed standard. Looks like, we've had Russia is now backed by gold, the Russian ruble. You must have seen Scott Zimbabwe has now launched a currency that's backed by gold. I haven't looked at it in too much detail.
Mates are having some fun comments around that, yeah.
Yeah, so, well, it's just interesting, but I see the whole fiat currency, phenomenon that's happened, that it's becoming near to the end of that and getting back to something that's actually backed by, not just promises of governments, which sketch yet.
The only problem with Zim, as my Zim mate said, is how do we actually know if there's any gold in the vault?
Yeah, true. Yeah, very, very true. Well, the way to do it is that you take your note and ask for some gold, I guess. Yeah, and then of course we got some central bank digital currencies where it seems central banks are trying to push towards a digital currency. But of course, that would be centralized and regulated over against, something like Bitcoin and these others that are decentralized. Which has, there's a drive for cashless society, but that comes with massive risks in terms of, government then having been able to see everything in terms of what your transactions are and control risks. You put that together with like what China has with a social credit score. And if you don't, toe the line, well, we just stop you being able to transact and you've got no cash to do anything. So it's the huge risks. I mean, there are advantages of going, of not using cash, but those risks are increasing with government control. But then, if they do that, is that going to be backed by metals and commodities? That's a big question. If you go that route, are we going back to something that's not fiat? So a lot of things in the melting pot at the moment. Of course, situation is if governments start forcing persons into a cashless society, well, then we just go back to actually bartering again. I'll do this for you, and you do. I'll give you this if you give me that. So there's always a way out, but it's just an interesting, very interesting time we're in at the moment, and it's a lot of things on the go, Scott.
Well, as even more excuse to get around the right information and have the right partners, because the one thing that I feel very strongly about is there's no ways I'm ever going to learn what you know. I mean, you've been doing it for 20 years, and pretty much everyone online here, could start tomorrow morning and they could do as much research as they want, but they're going to be 20 years behind you. So my philosophy is, well, I don't have to learn what James learns. I have to understand how he does it, and I have to understand how to read his charts to some extent, although you can even tell me like you just have. And then I can partner with you, and I'm going to jump ahead and I'm going to save myself 10 or 20 years and a lot of mistakes. And I think it's just a mindset. I know Chad was online. I don't know if he's still here, but Chad and them specialize in structured notes. Like, why go and try and figure out everything about structured notes when that's what they do? His partner Andrew's been doing it for 20 years. It's like, for me, it's a no-brainer. Like, and you want to do industrial property in America, go find a partner that's been doing it 20 years. You want to do German buildings in Germany, go find a partner that's been doing 20 years. Suddenly you're diversifying, but you're diversifying with partners that have been doing it for decades. And that's the power of what we're trying to share. I certainly don't know everything. Yes. I just love bringing partners like yourself, James, that can share with people so they can make the right decisions,
Yes, because it's having, in every situation, there are opportunities, and the world's in a state of flux at the moment, but with that comes opportunities.
Yeah, no, completely. But you've got to have the right information. And what I've always liked about you is that, again, I'm not into the day trading, so that's not my issue. But what I've always liked is the long-term views. And again, I only speak from my own experience. More often than not, you've called it right, and some of them have been quite bizarre. And I used the story while you were reconnecting with Bitcoin when it was like $3,000, and you were like, it'll go over $50,000, and I was like, he's finally lost his marbles, and it did. It went to 69, as you said, and now you're telling me it's going to go over 100. I must admit, there's a part of me going, yep, he's finally lost his marbles again, because I think you were like 100 to 377 or something, what I saw tonight, and I'm like, but you know, my point is, having been through this experience so many times, and so many times you've been right, then I start to think to myself, hang on, maybe I'm not in enough Bitcoin yet, you know, to give you an example, or or whatever, you know. So yeah, it's do you want to just cover your slide that you got up there on what you've got up?
Yeah, it's I mean, I'm just going through those three things that we shared with everyone today. I kind of updated, I mean, based on those, you know, that you can see that the opportunities despite there being uncertainty, we can bring some sort of certainty there to those sort of decisions. And then again, if you want to kind of dive into this a bit more and just take a trial of our service, there's the 2 links: 7-day free trial for our global markets and 14-day for the rain forecasting service. But that's about it, Scott.
So James, if you don't mind, what I'd like to do is those links, Shane has put them in. Shane, maybe if you just want to chuck them in again for people, because I would highly recommend. I mean, I've been using and working with James, as I said, for a hell of a long time, and I've always found it absolutely fascinating. I do also enjoy you giving the commentary, because I find when I just look at the charts, I mean, I've been doing it a long time now, and even still, I sometimes doubt my own judgment, because it can look hell of a complicated. But so when you go through it like you've just done now, I find it extremely valuable in terms of that process. So thank you very much for that. What I would suggest, James, is, if you don't mind, I just wanted to kind of steal the screen back and let people just know a little bit about what I was talking about earlier. Some people were just have asked me about what the mastermind was, and then there were quite a few questions that came through that I wanted to just answer quickly for people. So if I can just steal the screen for 5 minutes, I just wanted to kind of remind people again, because I know you and I, this Wealth Going Global, which was effectively the 10-year digital upgrade, and this whole module, this currency module, is what James did. But a lot of what we've spoken about tonight, how do you choose the right countries? We didn't go into this detail, but there's a whole dynamic around it: currencies, assets, partners, and then obviously the asset mastery is all about finding the right partners. So I always talk about, you've got to get the right information and you've got to get the right partners. And this is all about teaching people in a practical way how to do it, and then walk away with tangible outcomes and results. The other thing I wanted to talk about is that, 10 years ago plus, we were doing buyers trips, and a lot of people came out and they said, listen, over the last 10 years, people have said, listen, I'm getting the information, but I actually want someone to hold my hand. I actually want someone to work with me. And the research is pretty interesting. Harvard said that you've got a 400% better chance if you've got a coach. And, I always joke with people, I'm not going to go into the detail tonight, but I always joke with people, if your doctor said you had to lose 10 to 15 kilos, like in the next 3 months, otherwise it would have a material impact on your life, would you go buy a home study course, or would you get a coach, a gym coach? And I think we all know you would get a gym coach. So, if your investments, of your finance, of getting globally diversified passive income was as important to you. And there's this little video that explains it really, really well.
This is extremely predictable. Tons of research around it. Humans change 5 times faster in groups than they do with a one-on-one coach, consultant, or therapist in that case.
Wow.
So I started looking back at business models and people who had done this effectively over the generations. Masterminds aren't new, folks. They're not new at all. People have been doing this for thousands of years. And when you put a collection of people together who are all committed all driven and all so want to make the right changes happen, and you give them a leader to follow who's willing to get in the trenches with them, all of a sudden you start finding real, rapid life or business transformation.
You know, and I found it interesting. I know Chad's also been part of this with Roger Hamilton. You know, I joined Roger back in 2011, and I just got amazing value out of being part of different masterminds around the world. And I then found this research about 2 years ago. You know, people change 5 times faster if they're in groups than they do with a one-to-one coach. If you've got a collection of people who are committed, all driven, and so want to make the right changes happen, you give them a leader to follow who's willing to get in the trenches, all of a sudden you start to find real rapid life and business transformation. So I spoke to you earlier about how to do it 5 times faster. It's not my opinion. It's a mixture of Harvard's opinion and research in terms of how to do it. And it's to get in a group of like-minded people. But the question is, you know, do you want to stay in your comfort zone, or do you want to kind of go to where the magic is? And it's all about getting out of that comfort zone. And that's why we created the Mastermind. So I'm not going to go into the huge amount of detail tonight, but in simple terms, it's a group of like-minded people. We've got this amazing community of people from England, Ireland, Germany, Italy, Spain, Portugal, South Africa, Zimbabwe, Zambia, Australia, New Zealand. So it's this incredible, nice group. And what we're basically doing are diversifying across countries, currencies, assets, partners, and time. And it's all about building globally diversified passive income. There's 5 steps. We literally sit with you and we get very clear on the outcome. What are you wanting to achieve? We then work on your current portfolio. So this is what we do with Calio Capital, which is a family office. It's all about optimizing your current portfolio, including tax and structuring. We then help you build a plan to get from A to B. So where do you want to be? Where are you? And then it's about monthly execution. So accountability, mindset, and execution on a monthly basis, and then the whole financial component. 5 simple steps to help you get the results that you want. It includes Wealth going global, which, as I've said to you, countries, currencies, assets, partners, and time. And it also includes asset mastery. So you've got all the substance and everything that you want. But in simple terms, you've got the home study course, but you've also got someone, myself and Alex and the team, working with you. Unfortunately, it's not a mass market thing. It's literally private. I work one-to-one with you. Kelly, I work one-to-one with you. It's a bespoke offering. So we can only ever offer it to 5 people in terms of an onboarding process. And so if you are interested in that, I'd suggest setting up a call. So literally go to diversificationmastermind.com. And it's quite simple. It's a 30-minute application call. All that we're wanting to do is understand what you're trying to achieve and make sure that we would be able to help you. So what are the risks? What are you trying to achieve? How can you do it? And then from our side, we want to see if you qualify. So it works quite simply. What are you trying to achieve? Can we help you? And then equally, it's you also vetting us, because a mastermind is materially important that you get the right people in and that they're all going in a like-minded direction. So between Alex and I, we work very hard on curating that community. And then if you do book a call, please just make sure you turn up on time, because your time is very valuable, so is ours. So we just ask that people respect each other's time. And as I say, there's only 5 spots in terms of it. So that's I just wanted to give a quick heads up, because what we found, James, over the years is, I mean, you and I have been doing this for many, many years, and particularly a lot of people like kind of get the knowledge, but they don't trust themselves necessarily, and they want someone to hold their hand. They want to be part of a group. They kind of want to be coached and held accountable, etc. And so that's why we created the Mastermind. But what I want to do, James, is, I know I can't see you, but there were a whole bunch of questions that sort of were coming through. And if you don't mind, I know we've been going a long time already, but have you got 10 or 15 minutes so we can just try and answer these questions for people? James, you there? You haven't left me to answer them on my own, have you?
Yes, I am. Can you hear me?
Yeah, I got you.
Okay. I muted myself.
No, all good, all good. Okay, so let me just look through here. I'm just going right from the top with the questions, because I saw a whole bunch coming through. Is it being recorded? Yes, all our webinars are recorded. So we will send out the link, plus we'll send out links for James's free offer. By the way, James, thanks very much for offering that to community. I deeply, deeply appreciate it. Let's just look here quickly. Jay said, I'm actually learning something on this topic for a change. So Nelly said, we'll be able to get the recording. These are gems. So yes. Wendy, you asked what should we be doing now? Hopefully James has answered that with a whole bunch of long-term trend analysis. Damien said, I don't want to be a trader, so how can I benefit? Damien, please just, and Wendy as well, please put in the chat box lower, because those did come up and I did try and answer them while we went through. I don't know if you know this, James, where can we find the crypto fear and greed index? Are you aware of, I mean, I'm sure if we Google it, there must be one, but yeah.
Yeah, I had it here.
Then Menno said, Damien, I think the plan that I create is to invest on a regular basis, whether the markets rise or fall, is to stick to a plan, whether it seems contrarian or not. It's interesting, Menno, there's research that came out that if you try and time the market, by the time you're 65 versus you just invest consistently, like you're saying, you're going to be 30% better off by the time you're 65 than if you try and time the market and try get in, get out, versus just consistently doing. Like, so again, the stats are 30% better off if you just go with consistency. Verna, we answered the thing around fear. Damien, I'm signed up for next week's masterclass. So yeah, I mean, we'll go into that in a lot more detail in terms of giving you actions and how to deal with it. Chad asked, is the fear and greed indicator the RSI, relative strength indicator?
No, it's not. It's actually it's a reading in the market of actual fear and greed. So I don't know whether it's a combination of, from what I remember, like search terms and actual feedback, I think. Now getting that sort of feedback from persons as to where, you know, where they are in their own emotions.
Well, I mean, now that I've got the
you...
screen, I didn't want to steal the screen off you in case like you couldn't take it back after how we started. But yeah, I just went and Googled it, and here's the thing, and it sort of came up with this fear indicator, etc. So I haven't had a chance to look at this, but this is what came up when I looked at it.
Yeah, that's it. That is it. Yeah, that's the CNN one.
Yeah.
And then if it's
then as you've answered Chad, then the next one was Jacqueline said, I find it difficult to work out the difference between a pullback and when the trend is well and truly over to get myself out. What would you say to that, James?
Just read that again.
So Jacqueline's saying, I find it difficult to work out the difference between a pullback and when the trend is well and truly over to get myself out.
Yes.
So
yeah, and I mean that.
Yeah.
I mean that is where a lot of persons stumble, you know, because once the market has hit a peak and then comes off that peak, ideally to get out, you'd like to get quite close to that peak again. But if it has, and that's why persons kind of hold on to, like if it can only just sell at, you know, at 2/3 of the way up. But once it gets to that point, you think, well, maybe it'll go further, and then it collapses, and then you've lost your opportunity. So, I mean, that is why you need an objective view as to whether the market has likely topped out at that point or not. Because your emotions will find it difficult to determine whether the market has topped out or whether this is just a pullback.
I'll never forget many, many years ago, I mean, I was a teenager, and my uncle helped us invest in the stock market, and we sold shares in gold on a Friday, and then it crashed on a Monday. I was like, his name is Bill. I was like, Bill, how the hell did you know that was going to happen? He says, no, he's learned a long time ago to take profit off the table. And it's better to sell at 85% than to always wait for 100% and it falls off the other side. Yep. So just always a very interesting lesson I learned from him many years ago. Menno, without wanting to time markets or become a day trader, if you have a diversified plan and stick with it, Is it not simpler to dollar cost average and simply set a monthly investment and check every so often whether it's necessary to rebalance? Yeah, so man, I think, again, actually, funny enough, the next masterclass we're doing is those 6 pillars to wealth. And I think if I understand what you're saying, it's very much in line with that. So, you know, again, on a platform like the Wealth Migrate platform, you can invest in different assets on a regular basis. And then, you know, at the end of the year, you should look at your portfolio and you should rebalance in certain areas, etc. But the consistency is the key. And that is, you know, that from my experience, having watched people for 20 plus years, it's the consistency that ultimately gets you there. There's, you know, yes, obviously there's the Facebooks and the Googles, and sometimes you hit this incredible home run, but it's so seldom it's not even worth talking about. I know Chad, as an example, you know, they bring out a structured note once a month. And, you know, rather, if you've got $100,000, rather put $10,000 into 10 structured notes than put $100,000 into one structured note. I'm almost guarantee you Chad would say the same thing. And again, my philosophy is, you know, do it consistently and invest in different assets in different countries, in different currencies, with different partners. And then, you know, you're building a nice diversified portfolio. The only thing that I think technology has dramatically helped us with is you don't want complexity. Like, I certainly don't want structures all over the world and bank accounts all over the world, because it's an absolute nightmare. So technology makes it really easy. In a place like, I'm not saying Wealth Migrate is the only one, but a place like Wealth Migrate, you can do it all in one place. And the second thing that, you know, you've got to be very careful of is again, not kind of spraying and praying too much. I had someone the other day that was like, I'm going to invest in Manchester and this and that. And again, you know, James actually said it earlier, rubbish in, rubbish out. And yeah, I don't know. You've got to be very careful of mom and pop investing is what I refer to. Sharon said, this is amazing. Years and years ago, I worked at a Waldorf school. I took a geometry workshop that had us looking at the contraction and expansion of a market and plotting those graphs. When I joined the lines, we came up with shapes of leaves. Wow, I should have paid more attention. So that's interesting. Werner said, who is holding this debt? Is it not paid or settled? Is there a reserve at the World Bank? And what is the World Bank balance sheet? So what Werner's basically asking, James, is all that debt you were showing for America, is who's actually holding that debt? If you're talking, James, you're muted. Okay, I'll try to answer that. My understanding is that quite a lot of that debt, ironically, the American debt is actually held by China, which is kind of ironic. But yeah, my understanding is that a lot of it is printed, and it's a bit like a credit card machine, where the what's it called now? The reserve banks effectively, you know, print the money and then it's owed, and it's basically like almost like a pyramid scheme on top of it, with bonds and everything in between. But I'm not going to sit here and try to sound like an expert in it. Sammy, does this mean 2025 will see the whole world economy falling? Yeah, I mean, interesting enough, Alex emailed WhatsApp me privately and he said, wow, this is really scary. And it is. I think the point being is we can't be naive. You know, if you look at Ray Dalio, and he talks about exactly the same things as James, and he says you've got long-term trends, medium-term trends, short-term trends. You've got social and economic and political instability, and they're all intersecting all at the same time, and it's all happening in this decade, and there's going to be a huge amount of instability. And, you know, the facts are the facts. Like, you can't run away from the facts. The only thing is you can either be proactive or you can be reactive. And if you're proactive as an investor, my opinion, you would be diversified. Not just my opinion. Ray Dalio says it's the #1 strategy you should be looking at to, you know, diversify across countries, currencies, and assets. And again, we have an entire challenge on it next week. The bottom line is, if you're naive, there's a good chance that you're gonna have major problems over the next 5 to 10 years. If gold is going to drop out to these low levels, people are stacking up gold now, thinking it'll be a hedge, but I'm understanding it won't if it drops the value. Yeah, it's hard to tell. Again, you know, Jacqueline, with any asset, what James is showing is that, you know, what he showed was that both gold and silver his exact words, because I, by the way, take notes, highly recommend that you take notes whenever you're doing these things, was that gold and silver was going to rise initially and then have a substantial correction. Just a point on, that I learned is that income is ultimately what gives you freedom. So I fundamentally believe you want to look at assets that are providing you with income. Menno says, I suppose it's a great time to increase euro holdings before the cycle bottoms out. Completely, Menno. And it's one of the things why we're so excited, because we've literally got an income producing German deal, 6.5% yield in euros with a nearly 16% IRR. It's awesome with an incredible partner, huge track record. They invest 10% of their own money in all the deals. It's really great, and it's in one of the top German cities. It's a great story. So go to our platform and check that out if you're interested. France, you saw the pound outlook. Sandra's asking how to select a good platform in SA, and then she went on to say equity platforms. I don't know, but Easy Equities, as I understand, it's the best in South Africa, certainly the cheapest. So go check out Easy Equities. Menno asked, what are the forecasts for Southeast Asia, Japan, and India? I don't know, James, if you're here. I feel like I've been left to answer the FAQs on my own. But I don't know if you've got forecasts or do that. I know certainly if you are here. Okay.
I am, yeah.
Any comments on those Southeast Asia, Japan, India, in terms of your forecasts? And it's actually a double-edged sword, because I kind of, or not a double-edged sword, a double question, because I'd sort of like to know as well. I know you've always focused on first world countries, first world currencies, but as these emerging markets are becoming more and more important, what's your kind of take from your own company perspective as well?
Yeah, well, I assume you're talking from your economy point of view and then stock market point of view. I mean, not to give some indication.
I'm not sure. I'm literally reading the question, but I suppose, I mean, he's asking the forecast for the countries, I assume, and then obviously probably tied to the stock market. And then I'm asking from your perspective, how you see your company adapting, because I agree. I think the emerging markets over the next 10, 20, 30 years are where the real opportunities are going to lie. We might park our money in the first world and preserve our capital, but real growth is going to come from, I mean, India is an incredible place. I'm desperately trying to get into India. I just haven't been able to find the right partners.
Yeah, I mean, I haven't looked at any of those in real detail, but I mean, it's something that we've been, what I was wanting to actually ask with on this this webinar is, what sort of interest there would be in other markets, whether there would be interest from your this community in relation to markets we haven't covered, and whether there was some way we could actually sort of provide that on a regular basis, whether it was on a newsletter or webinar or something along those lines.
Well, I think you and I have discussed this at length many times, James, and maybe we need to follow up with a survey around, because I also find, like for me, I don't want to listen to a 3-hour webinar or 5-hour webinar once a month, but I mean, it would be wonderful to have a 15 to 20 minute update. Like I don't even have to turn up. It could just be a recording that I watch,
Yes.
And I think, what we should do is probably curate a survey, send it out, and then see where the demand is. Because obviously there's no point in you doing the work if people aren't interested,
Yeah, and then what sort of things would be of interest? It could be that it's dynamic, that we cover certain markets that are of the main global markets, but then based on a monthly survey or something, what other markets do we want covered?
Yeah. No, well, let's put that together. Jacqueline said, amazing presentation, James. I learned so much with your spin on these topics. Ilda said, thanks, Scott, Shane, and James. Very informative. Shane's put in the link there if people either want the free things from James, his free offering, and also if you want to apply for the Mastermind. Marion said, is Bitcoin going to be taken off the market eventually? I'm not really sure, Marion, what you asked a question earlier if it was going to fail. And again, we did an entire thing as part of the Mastermind on cryptocurrency. And, you know, at the end of the day, Bitcoin is the reserve currency. So like the US dollar is the reserve currency of the world. Bitcoin is effectively the reserve currency of crypto. And so, you know, I don't want to get into a whole crypto conversation. I don't know, James, if you've got any opinion, but particularly with the halving, it means that you can't have this ongoing printing of money or whatever, like supply has actually been constrained. There is a cap of 21 million Bitcoin. So it can, you know, be never ending. There's a physical amount, and so the price actually can only go up based on economics of supply and demand. And so I think Bitcoin's probably gone too far now to be switched off, even if a far better technology came out far faster, far cheaper, which by the way, there's lots of them. They seem to all still ride on the back of Bitcoin as almost the reserve currency. Again, James, tell me if I'm wrong. That's just my opinion.
Yeah, to me, it's, you said like the dollar reserve currency. I more think of Bitcoin as being the gold of the crypto sphere. So, you know, where gold is, it's slow to actually, if you want to buy or sell it, it's kind of difficult to do so, but it holds value because there's limited supply, and over time will gain in value because of that. And it's a similar situation with Bitcoin. You know, it's not anything that really has a use case in other than actually you know, a store of value that you can trade. Whereas you got like, you know, Ether or Ripple or some of these others that it actually got a use case for actually, you know, replacing like the Swift system. You know, XRP and some others, I think, are probably going to be instrumental in replacing the whole Swift system to be able to transact easier and all that sort of thing internationally. But at the end of the day, Bitcoin is going to be where the store of value is.
Just by the way, James has given me the link, which I've put in the chat box for everyone, with the crypto fear and greed index. So it's here. I don't know why I haven't been given all these holidays of elephants, but anyway, the AI has clearly decided I need to go on a game reserve holiday in terms of all the advertising. Okay, Chad had a question. He said, so in about 2 years, the Dow Jones and precious metals do roll over. What do you see yourself moving into to protect value?
Who's he asking?
You. I'm too scared to answer that one.
Well, I mean, to me, I'd kind of see at that point, I see where the different cycles are going. You know, as we're talking about crypto having some place in that. Obviously, always to have some store in real money in terms of precious metals makes sense. I was seeing Rich Dad, Poor Dad was actually recommending gold and Bitcoin recently. Gold, silver, and Bitcoin. I don't know, Scott. You know, it depends at those sort of points. One thing interesting is when there is a total market crash, that actual cash can be actually the best for a period of time. I mean, just cashing out of everything.
Yeah. Look, I think the only way I would answer that, and I've answered this a few times when people have said, well, what happens if, you know, the currency falls apart completely? And I mean, we've all, well, particularly people that live in South Africa, have witnessed what it's like when a country completely implodes. It happened in Zimbabwe. And if there's Zimbabweans online, I'm sure they would attest to what I'm saying. At the end of the day, if you've got assets that people need, you know, buildings that people need, or, you know, whatever, schools or houses, or, you know, basically things that people need, whether you transact in currency, or whether you do it in sheeps and pigs, or whether you do it in, you know, bartering or whatever, like people will find a way to transact because they have to. But you ultimately want to have assets that are going to be really needed, in simple terms.
Yes.
So,
yes.
and I'm just giving you my own experience from Zim.
Yeah.
Ashton said, how much of an emphasis do we place on the upcoming elections when forecasting, seeing that there are so many countries holding elections this year? Something ridiculous, actually, like 25%.
50?
It's 25% of all countries. So again, 50 countries out of 200, 25%. But of those countries, they hold more than 50% of the world's population. But yeah, I don't know. How much of an emphasis do you place on that, James?
I mean, it is interesting that you got all those cycles happening at one time, which obviously means a lot more volatility. But if you look back at the cycles, I mean, they're telling us that we can expect high volatility this year. So one way that, you know, that feeds into it, that just sentiment will be elevated and volatility elevated this year. So it's the same persons that are involved in elections that are in financial markets. So, you know, it will affect it, but it's because the cycles all seem to be aligning at the moment.
Yeah. Well, yeah. I mean, I don't know if you heard, I said that earlier. You spoke about long, medium, and, you know, short-term trends, and so does Ray Dalio. And it's, you know, it's not a case of if, it's a fact. Ashton said, who is Satoshi? I think it's actually Alex. I think Alex has been quite quiet on that one. If you don't know what I'm talking about, Satoshi is supposedly the founder of Bitcoin that no one actually knows who it is.
You're saying it's Alex? Alex is Satoshi.
Yeah, I'll just Alex loves tech, so I'm just going to assume he created it, although he was probably about 10 when Bitcoin was created. Okay, Chad said, thanks, James, always fascinating. So we should keep subscribing and look a year or two ahead. So yeah, I think Chad could help this. Menno said, excellent conversation. Thanks, James and Scott, learning from you guys and gaining confidence as a result. So perfect, thank you. Ashton said, if Trump gets re-elected, do we see the US stock market rallying next year? I mean, James is in the US, so he's better, you know, better equipped to answer that.
Yeah, well, we're looking, it's looking like we're due for a correction. But then, as I said, it could be that we have another push higher. So, I mean, that's a possibility that could align. That, you know, it's maybe the cycles are telling us that he is going to be.
So just one thing that I think is quite important here is that, and the way I would answer that actually is, you know, James, obviously you've helped us dramatically with understanding the cycles and the trend analysis and everything else. But one of the things that I enjoy most about our Mastermind community is that every single month we sit down with the family office. Now, remembering that they're managing literally billions and billions of rand. And it's interesting because these type of things come up. What I'm going to call shocks in the market. It could be the Israeli conflict or the fact that they attacked Iran. I mean, all the stuff happened in the last month. And Anthony takes us through the markets and kind of what's happening in the markets and why it's happening, the different asset allocation, what one needs to look at. And then he looks at certain things like the Fed cutting. And I mean, I'm literally showing you what we did 2 weeks ago and the inflation, etc. And my point being is that I guarantee you the elections will come in and be part of that. And I think why I'm showing you this is that what we're trying to achieve for investors is you've got James and all the analysis James is showing, you've got Anthony and the team at Calio and everything they're showing, and you start putting it all together and it starts making you be able to make far better decisions than if you're just trying to ad hocly do it, and or you're trusting your financial advisor that, in my opinion, is stuck in one country being, you know, incentivized to sell you one product where they get the highest commission. This is not against financial advisors. I've got nothing against financial advisors. What I've got is that you need to be empowered so that you've got the right decision, so you're not just taking whatever you're told. And by the way, if you ask that question in America, like, you know, you'll get killed depending on who you ask the right question, because people are so polarized as to who should be the next president. it's interesting that no one never sees any financial information about the effect Trump had on the US. Must have been great. Again, Wendy, I'm scared to answer that, but because obviously there's lovers and haters. But my understanding was there was actually a tremendous bull market while Trump was president. I'm not for or against Trump. I want to be very clear. My understanding was there was a tremendous commercially, growth. Now, James, please tell me if I'm wrong, or anyone else tell me if I'm wrong. But my uncle, who I highly trust and respect, take all of the rubbish that he spoke about, Trump I'm talking about, but commercially, America grew and the economy grew substantially under Trump's reign. Now, whether that just happened to be, I've heard the opposite, that it was actually all the hard work Obama did and he just, had the momentum, who knows. But according to the facts, it happened while he was president. Again, James, tell me if I'm wrong, but that was my understanding.
Yeah, you're right. I mean, the fact of the matter, it's the first time you had a businessman at the helm since whenever. And just take out all the things that he said, but look at what he did. It benefits this country a lot. But why you don't hear about it is because all the mainstream media hate him. So you won't hear about it. That's the fact of the matter.
Michael Anisette saying lowest unemployment. Ashton saying cause of the tax breaks. This is one of those moments where they say don't talk about religion, politics, or like I can just see us going down a rabbit hole here.
No.
God's a Trump hater or Trump lover, whatever. So I learned a while ago to really, really cause shit on WhatsApp groups by having an opinion, but only with my mates. So, anyway, listen, I think it's probably a good place to kind of end off. It's been a long session, James. I deeply appreciate all your time. Just to remind everyone, in terms of some concluding comments, James has offered you 2 free options to go and trial the information and how it works. Again, you can go blind and kind of hope and pray that you're going to kind of figure out the information via your financial advisors or by reading the newspaper, or you can get far better guidance. He's given you tools as to how to do that. I know many of our top clients actually have even come via James in terms of, from that perspective. We've also shown you on our side, for people that want to have their hands held and have an entire plan put together, we've created the Mastermind. It's been going now 18 months. We've got a wonderful group of people that are part of that. So if that's something of interest to you, then click on that link and come to an application call, and we can see if it suits you and suits us, and we can see if you qualify. And in conclusion, James, I just wanted to say a deep gratitude. I know this presentation you've put together specifically for the community. The last time you did it was nearly 2 years ago, because it takes a huge amount of work. So I just don't want to underestimate, on behalf of the community, how much work you've put into it. And I just want to say a huge, huge thank you from our side. As always, it's incredibly enlightening, and I hope for everyone else, they realize how much work you've put in to be able to come and condensedly share it with them in 90 minutes or 2 hours, whatever. So thank you.
But been my pleasure, Scott, to add some value. But hopefully you can help persons see what maybe a missing piece of the puzzle or two, and where they can find that piece of puzzle to make their decisions much easier going forward. So,
yeah, well, I mean, it's clear as day that we're going into troubled waters, or we're already in troubled waters, but going into troubled waters. And so at least, my closing comment is try to make sure you get the right information and the right partners, because it'll help you guide your way through. Have a wonderful evening. Yeah. Thanks to everyone who's been online. And if you are enjoying these, share them with your friends. We've got a whole bunch of webinars. Share the recording. Our philosophy in life is that if the more people we can empower, the more we can change the world for the better. But it starts one individual at a time. Have an awesome evening, everyone. Cheers.
Cheers.